We're not writers, but we help you shape your financial story. We're not an airline, but our network connects global businesses across nearly 160 markets. We're not a startup, but our innovation labs use new technologies to help keep your information secure. We're not architects, but we help build stronger communities. We're not just any bank, we are Citi.
Why should we trust these guys? Why do we continue to pay them to use what's ours? Why should we stick to the broken ways when we now control how to buy, sell, and trade what's ours? Even that. Why do we just accept that companies...
We were trying to do that wheel now. Okay, sorry, it's just...
There was an issue with the microphone. Josan. Good morning, ladies and gentlemen. If you would please make your way to your seats, we are going to begin the proceedings in just a few minutes. So welcome to Hong Kong FinTech Weekend. Find your way to your seats before there are none left. Hong Kong, and hello world. We are thrilled to have the world right here in Hong Kong to explore the future of fintech. We are bringing you the world's most innovative leaders from the world of banking. We've got the tech geniuses. We have got the regulators that are charting a course to the future. My name is Andrew Work, and I will be your MC for the next 2 days on this grand adventure. And I am telling you that Hong Kong FinTech Week has pulled out all the stops to bring you the people here on the center stage that can answer all the questions that are in your mind about the future of fintech and where this is all going. And ladies and gentlemen, we are going to kick off this grand adventure with a very, very special guest. We are going to begin with the Honorable John Casey Lee, the Chief Executive of the Hong Kong Special Administrative Region of the People's Republic of China. Ladies and gentlemen, please welcome Mr. John Lee.
Deputy Governor Zhang Chong-sung, distinguished guests, ladies and gentlemen, and friends around the world, good morning. A warm autumn welcome to FinTech Week and to Hong Kong. This week's and this year's Hong Kong FinTech Week, the 8th annual edition, features more than 500 speakers, 650 exhibitors, and thousands of participants from over 90 economies, here in person, online, everywhere. This is a flagship event of the Hong Kong SAR government, and we aspire to bring together the brightest minds in the industry to a week of FinTech activities. The week-long events are themed FinTech Redefined and will help to shape the future of FinTech in every dimension. I had the opportunity of visiting some of our impressive array of exhibitors at your booths just now, and I must say I am encouraged by your passion in FinTech and in Hong Kong. You are here because Hong Kong is made for FinTech companies, entrepreneurs, and investors. We are one of the world's leading financial centers and China's major financial center. No other economy can claim our unique advantage under the one country, two systems principle, which has empowered us to draw on and create opportunities from both our country and the world at large. Firmly premised on the one country, two systems principle is an important source of impetus that ensures our connectivity and drives our development. We are blessed with an open and highly internationalized market, advanced infrastructure and communications, and strong support in all regard. We have internationally aligned regulatory regimes. We have long been a free port and separate custom territory. We champion free trade and the free flow of information and capital. Add to that the robust rule of law and the fact that we are the only common law jurisdiction in China. You will know why Hong Kong is a FinTech future, a truly redefined future. Our strengths in financial services are wide-ranging and multifaceted. Hong Kong is Asia's asset and wealth management hub. Last year, we managed nearly $4 trillion in assets. About 2/3 of that came from investors beyond Hong Kong. We are also the world's largest offshore renminbi business hub. We have about 1 trillion renminbi in deposits and handle about 75% of the world's offshore renminbi payments. We are Asia's green and sustainable finance leader. Last year, the green and sustainable debts issued in Hong Kong exceeded $80 billion. Green and sustainable bonds arranged in Hong Kong accounted for more than 1/3 of the Asian market. These and other achievements reflect the prowess of Hong Kong's financial sector and its potential. The opportunity is here for us and for you. Over the past year, I have led high-profile business delegations to Southeast Asia and the Middle East. From Thailand, Malaysia, Singapore, and Indonesia to Saudi Arabia and the United Arab Emirates, we shared our success stories and talked about Hong Kong's return to the global stage after COVID-19. ASEAN is our second largest trading partner for 13 years in a row. Our trade continues to grow, soaring almost 40% since the signing in 2017 of the free trade agreement between ASEAN and Hong Kong. Last year, 15 new offices with parent companies located in ASEAN opened in Hong Kong. Some 650 ASEAN local and regional offices and regional headquarters now call Hong Kong home. The 10 member states of ASEAN are founding members of RCEP, the Regional Comprehensive Economic Partnership. In my meetings with ASEAN government leaders, they all reaffirmed their support of Hong Kong's accession to RCEP, the world's largest FTA. My officials have also been covering the ground around the globe. While keeping our close ties with our traditional partners in the European and American markets, we are also expanding our reach to markets under the Belt and Road Initiative, including those of Southeast Asia, Central Asia, and the Middle East and Africa. We have been telling them that Hong Kong is fully in business, creating boundless and new opportunities. From promoting cooperation in finance and commerce to innovation and technology, we are committed to offering the far-reaching rewards to different economies and their businesses that are looking for high-quality development. As you know, I presented my second policy address a week ago. I announced a number of policy initiatives to boost growth and enhance Hong Kong's competitiveness. Allow me now to highlight a few of those initiatives in financial activities. In securities, we will take forward a number of reform measures. We will reduce the stamp duty on stock transfer and market data fees. We will also look into how best to allow and follow up on suggestions of a dedicated task force to boost market competitiveness, from trading under severe weather to facilitating share repurchase by issuers. Other medium and long-term measures on listing regime, market structure, and trading will also be considered. The goal is clear: to promote the sustainable development of the Hong Kong stock market. Hong Kong Exchange will set up a new integrated fund platform. It will focus on services related to fund subscription and redemption, settlement, the information portal, and more. It will strengthen connectivity between Hong Kong's fund industry and the mainland's financial markets in the long run and boost Hong Kong's competitiveness as an international hub for funds. The Secretary for Financial Services and the Treasury, Christopher Hui, will share the details with you very shortly. We will promote a better integration of fintech and green finance to fast-track our economy's green transformation. We will expand green fintech, and in doing so, establish Hong Kong as a green fintech hub. Next year, we will launch a dedicated proof-of-concept subsidy scheme for green fintech. It will provide early-stage funding support for the pre-commercialization of green fintech innovations. It will also promote the development of technology-powered solutions. In June, Hong Kong Exchange launched the Hong Kong dollars renminbi dual counter model. It was created to advance the issuance and trading of renminbi-denominated stocks in Hong Kong. We will work closely with the mainland authorities to include renminbi counters under the southbound trading of Stock Connect and issue mainland government bond futures in Hong Kong. We will also liaise with the mainland on the expansion of the mutual market access program, including strengthening Bond Connect, as well as Stock Connect's product offerings and trading system. Ladies and gentlemen, the Hong Kong SAR government is committed to continuing rise of fintech and is expanding research and reach and influence in Hong Kong and beyond. We offer unparalleled opportunities for fintech businesses, for your businesses, to grow and thrive long down this 21st century of opportunities. My thanks to the organizers, the Financial Services and the Treasury Bureau, and Invest Hong Kong of the Hong Kong SAR government, and our many other supporters for once again staging this key event. Next on our financial events calendar will be the Global Financial Leaders Investment Summit next week. It is heartening to note that 300 leaders in the financial field, many of whom being group chairmen or CEOs of the world's top financial institutions, will be joining the high-powered summit. And if you can find the time, there is a world of art, culture, and entertainment, not to mention world-class hiking, biking, and fine and fun dining here in Hong Kong. It's everywhere you look and turn in Hong Kong, Asia's World City. Enjoy this FinTech Week, and I wish you the best of business. Thank you very much.
And thank you very much, Mr. Lee, for coming out today and for supporting the fintech sector. We appreciate that you've got an extraordinarily busy schedule working hard for the people of Hong Kong, and will have to leave us soon, but we do thank you for being here. Now, ladies and gentlemen, the People's Bank of China is responsible for the financial stewardship of the world's largest export economy, 1.4 billion people. It is an extraordinary remit and responsibility. And so we are thrilled to have the Deputy Governor of the People's Bank of China joining us today. Please welcome Mr. Zhang Qingsong. Please. Thank you. Welcome aboard.
Dear Chief Executive John Lee, distinguished guests, ladies and gentlemen, good morning. It's a great pleasure for me to attend the Hong Kong FinTech Week 2023. Today, I'd like to share my observations about inclusive finance empowered by fintech. Science and technology are the primary productive force, and innovation is the permanent driver for development. Fintech, as a technology-driven financial innovation, has become the key engine for promoting inclusive finance in digital economy. This week's Central Financial Worker Conference has laid out the plan for improving financial services through fintech and developing inclusive finance. Over the years, the People's Bank of China, the PBOC, has attached great importance to the role of technological innovations in inclusive finance. We have drafted development plans, launched pilot programs, and promoted demonstration projects. Through those efforts, we have guided financial institutions to empower inclusive finance with digital technologies to improve its quality and efficiency. In the meantime, we have actively engaged in the G20 inclusive finance reforms and made digital inclusive finance a standing topic under the G20. We have also enhanced regulatory cooperation on fintech with our peers in Hong Kong and Macau to promote digital inclusive finance. Through joint efforts, digital technologies such as big data, Internet of Things, and cloud computing, etc., has been widely applied to financial services on the mainland in recent years. And the integration of technological innovations and inclusive finance continue to deepen. This has further reduced the information asymmetry and greatly expanded the access to inclusive finance. In addition, financial infrastructures could respond more rapidly to inclusive financial transaction needs, featuring with high concurrency, high frequency, and larger flows. Thanks to the above changes, the accessibility, availability, and customer satisfaction of inclusive financial services have improved markedly. Currently, over 95% of mainland residents have bank accounts. Payment services cover more than 99% of villagers. Micro and small business, MSBs, can open an account within 1 to 3 days. During the past decade, the value of the mobile payments grew at the average annual rate of nearly 30%, and the penetration rate hit 86%, ranking top globally. Ladies and gentlemen, please allow me to share some of the PBOC practices in encouraging financial institutions to empower inclusive finance with fintech. First, we have promoted inclusive finance to shift from labor-intensive to data-driven. The PBOC has guided financial institutions to build digital business systems underpinned by data and computing power. Through panoramic data analysis, financial institutions could better understand market trends and clients' needs, unclog business process, optimize resources allocation, and reconfigure workflows. Then they could shift business model from experience-driven and labor-intensive to data-driven and technology-intensive. After this transformation, financial institutions could provide high-quality, inclusive financial services at lower operational cost, which is more commercially viable. For instance, with the help of the technologies such as RPA, OCR, and low-code, some financial institutions have achieved timely product innovation and business process automation. Their efficiency of inclusive financial services has significantly improved, with one client manager now able to serve 4 times more clients than before. Second, we have strengthened the digital channels for accessing financial services. The PBOC has made enormous efforts to ensure financial services cover the last mile. We have guided financial institutions to set up smart and digital service channels and build a multi-dimensional financial service network which connects online and real-world services and integrates financial and public services. Now, many financial institutions have adopted a one-stop service model so that clients could get all business done with just one visit. Financial services are no longer confined to physical banking outlets and are available on apps and in communities. Third, we have supported financial institutions to leverage big data and other technologies to improve credit extension and risk control management. As you may know, the financial needs of the MSBs are mostly short-term, frequent, urgent, and small in amount. Therefore, the PBOC supports financial institutions to harness technologies such as big data and AI and develop financing plans based on differentiated algorithm. Digital risk control has covered the entire lending process, which constantly improve credit approval and risk management and make credit services more readily available and targeted. Empowered by the technologies, inclusive finance has seen remarkable growth. By the end of September this year, outstanding inclusive MSB loans stood at around 29 trillion RMB yuan, a year-on-year increase of 24%. Over 61 million MSBs have gained access to loans, up by 13% compared with the year earlier. In September, the interest rate on inclusive MSB loans was only 4.6%, a record low, and the non-performing loans at a comfortable zone. Fourth, we have enhanced financial inclusion to better serve the elderly and the people with the disabilities so as to close the digital divide. As of September this year, more than 1,000 financial institutions have released over 1,100 accessible financial apps with features such as the larger text and voice-controlled systems. Ladies and gentlemen, Hong Kong is an international financial center, as well as an innovation and a technology hub. The Greater Bay Area as one of the most open, dynamic, and competitive world-class city clusters, is well-positioned for developing fintech and inclusive finance. In the few days, the PBOC will sign a tripartite MOU with the Hong Kong Monetary Authority and the Monetary Authority of Macau to connect PBOC's fintech innovation regulatory tools with HKMA's fintech supervisory sandbox and the AMCM's regulatory requirements for innovative fintech pilot trials. This will further strengthen regulatory cooperation on fintech innovation in Greater Bay Area. The PBOC will continue to strengthen exchanges and cooperation on inclusive finance with other central banks, monetary authorities, and international institutions. We stand ready to share Chinese stories, learn from international practices and experiences, and actively contribute to the development of global inclusive finance. Let me conclude by wishing the Hong Kong FinTech Week 2023 a complete success. Thank you very much.
And thank you very much, Deputy Governor, and thank you for joining us all the way from Beijing. We appreciate it. Now, ladies and gentlemen, earlier, the Chief Executive of Hong Kong reminded us that this week's theme is FinTech Redefined. And he also dropped a little bit of a spoiler that we were going to hear something great from our next speaker. He is the Secretary for Financial Services and Treasury of the Hong Kong Special Administrative Region. Ladies and gentlemen, please welcome Mr. Christopher Hui.
Governor Zhang, ladies and gentlemen, and just now you hear very clearly what the instruction given by our Chief Executive about what I have to say. And so in my current presentation, I'm going to share with you some of the key initiatives that we have provided for all of you for this year's FinTech Week. If I recall, last year at the FinTech Week, which is the same venue, I had a fireside chat with the founder of Animoca Brands, Yes Siu. And in that discussion, what impressed me was that being a FinTech pioneer or leader, not just being a business person is enough. You need to be more than that. And fundamentally, be a philosopher fundamentally, because after all, you need to convince your clients, your stakeholders, and also your future clients and stakeholders about what you are selling, and also the vision that you are trying to build for this economy. So borrowing that theme of being a philosopher, this time, when we devised this theme for this year's FinTech Week, we start with a definition, because normally, as you know, philosophers, they like definitions. And there are different ways to define a thing, and I'm sure that in your own mind, there are different ways to define FinTech. And the way that we define it this time as a possible option for all of you is to see how we can link FinTech with the mainstream finance and also the real economy. And that's exactly against that backdrop that we try to provide to all of you the details of the three initiatives that we have in terms of how we foster FinTech development in Hong Kong. And namely, I would say the first one, as highlighted by the Chief Executive just now, is about our plan to build a new integrated fund platform targeting retail funds. And later on in my presentation, I'll share more about that. And the second initiative, and also highlighted by Chief Executive and also by Governor Zhang just now, is about how we can further integrate ECNY into our local financial ecosystem. Because after all, I think ECNY is of great use for both outbound and also inbound visitors to Hong Kong, out of Hong Kong, and also facilitate at the retail level the broader use of technology for payment purposes. And it's exactly against this backdrop that I want to introduce to you some of the new things being planned by some of the key players in this territory. And thirdly, in terms of initiatives, we're going to talk about more broadly our coming efforts to introduce further enhancements to our regulatory regime for VA and Web3, and at the same time about how we are going to bring about more real economy applications and innovations in the VA and Web3 space. And that's why this time, apart from FSCB ourselves, we're also working very closely with Invest Hong Kong, who has been seeing a lot of market practitioners across the spectrum of VA and Web3, and to engage them to see what market and also more product ideas they can bring to this part of the world. And don't miss that after this session when you engage them outside this podium. So first and foremost, as I highlighted, it's about this new infrastructure as highlighted by the Chief Executive. Last week, he announced his policy address, and one thing that we put together for the financial services related efforts will be about this new infrastructure. As all of you know, Hong Kong is already both a whole suite of financial infrastructures, both for our stock market, for our derivative market, for our debt securities market, and also more importantly for our interbank and at the same time the retail payment market. So after all, we already have a whole suite of financial infrastructures catering both at the institutional, market, and also retail level. And what we try to do is to add one more layer and one more component to that, which is a development of a new integrated fund platform targeting retail fund sector. And the whole idea basically is that with this new fund platform, we enable both people already here in this ecosystem, better efficiency, lower cost, at the same time to allow more new players into the market in terms of developing new products. Because recently, if you look at a lot of reports, I think there has been a lot of indication that in terms of the AUM managed out of Hong Kong, the trend is growing and increasing. And there's one report that I read, which I don't want to quote here, are saying that we are going to exceed and also outweigh other cities like ours in terms of being a fund and also wealth management center. So against this backdrop, we want to do more. And that's exactly against that. We will put together this fund platform, basically targeting retail segment. And the next question to ask is, what does this platform do? Essentially, if you look at this PowerPoint, what we highlight here are three basic functions that this platform serves. Number one is a communication hub, and secondly is a business platform, and number three is about information. So basically, what we try to do is to cater for different segments of the market. For business platform, of course, it's both for the users and also for people who are buying the funds to redeem them, to create them, and at the same time for the settlement of those funds and the units. And for the communication hub, I think essentially it's about the institutions that are engaging in this ecosystem. It could be about the trustees, the fund managers, so on and so forth. And finally, for the information portal, it will be more investor-facing. More information to them, including the fact sheets about the funds that they are buying, comparison across different products, so on and so forth. But all in all, I would say what we are trying to do is to enhance our financial infrastructure and also enable our retail market better served. And the next question to ask is, having done with what this platform is about, who is going to do it? Because after all, like every government, I think who is doing that is important. And we have HAEX, who is going to be a developer and operator of this platform. And based on the current plan, it's envisaged that it will be ready for launch by the end of next year. So hopefully when all of you come again next year, we will have a better and also more comprehensive and also hands-on experience to share with all of you about this operation of this new platform. And all in all, with everything that we have done here, as highlighted by the Chief Executive, what we're trying to do is to strengthen further our role as an international and asset and wealth management center. More specifically, if I'm not clear enough in terms of what this platform is all about, we try to set out here under the three themes I highlighted, being business platform, communication hub, and information portal, what this IFP is. If you look at the first column, essentially it's about the functions that this is going to serve, including the fund subscription, redemption, and also at the same time, nominee services like corporate actions. So it is something that this platform set out to do, which try to be as comprehensive as possible from the front to the back end of the value chain. And with that business function set up, I think essentially what communication it serves, the communication it serves is basically as a network, connecting the fund managers, the distributors, transfer agents, trustees, and custodians, and to enable data and messages to be exchanged and transferred more efficiently. And finally, definitely not the least, when our regulators come to me, investor protection is of essence. And that's why in this platform, we will also provide an information portal which allow the investors at the retail level to better access offering documents, fact sheets, and all fees and charges in such a way that they are better informed in terms of what they are buying into. So as all of you can see, it is an all-in and also at the same time a comprehensive network and also platform that we are trying to build here by the end of this year. So the next question to ask is, with the one issues about who's doing that being clear, what are the functions being served, why are we doing that? And as you can see from this PowerPoint, this new project basically serves multiple purposes. I think I'll start from the right-hand side investors, which is the clients they were supposed to serve. There will be more transparency in terms of enabling them to make better informed investment decisions, because there will be more information to them and also more comparison in terms of the fees and charges. But of course, we can't forget the intermediaries and fund managers, which I'm sure many of those are here. And right now in Hong Kong, we have 2,000 of those regulated asset managers. And many of them, I'm sure, have raised to us that they're interested in using this platform because it will be an infrastructure which enable them to do things now much easier and more cost-effective. And at the same time, if you look at not just more fund manager side, also intermediary side, but also overall at the market level, there will be enhanced efficiency in terms of lowering transaction costs and also lowering administrative and compliance costs. So it's something that all of us look forward to in terms of a project being all-win to all parties, at the market level, at the institutional level, and also at the retail investor level. So things don't stop there, because as all of you can see, fintech is a journey. So even though we already plan ahead for something to be launched by end next year, we also try to be more forward-looking in terms of what may come beyond that. As high-level chief executive, this platform, if successful, will pave the way for further service offerings and efficiencies, and at the same time also pave the way for further collaboration and cooperation between us and other fund markets, including, of course, the Greater Bay Area and other parts of the mainland. So hopefully through this very short description of mine, all of you are excited as I am and look forward to see how you can get onboarding this IFP integrated fund platform once it's ready for launch next year. So now it comes to another element, or the second initiative that we have under this philosophical theme of mainstream finance and also real economy in terms of the linkages to fintech. It's about the use of ECNY. And just now, I'm much inspired by the speech by Governor Zhang. I think he mentioned a lot of things from the policy angle on the ECNY. But I think at a more practical level, it's in terms of how individuals and people generally can benefit from this usage. And that's why, if you look at what has already been launched, I think this slide is very indicative in terms of what the offering is right now by Octopus Cards and also Bank of China Hong Kong, trying to build more connectivity between the mainland and Hong Kong in the usage of ECNY. And hopefully I can get some commissions out of this because I'm promoting for these two entities. And essentially, if you look at this from two angles, if you are Hong Kong people, which are a outbound Hong Kong resident going to the mainland, and right now you can use your Octopus mobile app and use that in Shenzhen to purchase ECNY hard wallets. The beauty of having hard wallets is that you don't need a bank account in China, you don't need a phone number in China, and neither do you need an internet connection in China, because after all, it is hard wallets. And at the same time, for the outbound Hong Kong residents, another way that you can opt for is to use your Bank of China Hong Kong personal bank account to top up ECNY wallet. So it's something that right now is doable, done, and also enable our people in Hong Kong when they travel the mainland to use that in the form of ECNY. And another angle, I would say, in terms of two-way communication is that not just about people going up north, but also about people going southwards. And that's why it's important that we try to see what are the things that are in offer to allow the mainland investors to come to use ECNY here. And right now, they can pay our retail merchants with their ECNY wallets here in Hong Kong. So you can see that already there are certain and also considerable linkages of using ECNY for people either up north or for people down south. So the next question to ask is, what's next? Because after all, I think fintech is all about continuous innovation and also progress. And in terms of the government, we do very much support more innovations in terms of financial institutions and corporates exploring cross-boundary usage of ECNY, focusing on retail payments and also in particular two-way connectivity. And the next thing to look into is when you try to go to China now, as I highlighted, you basically use their infrastructure, use their system to access the ECNY market. So the next move that we are contemplating, subject to, of course, technical and also regulatory approval, is to have people coming to Hong Kong and they can use our Hong Kong infrastructure to use ECNY. And the essential idea is trying to connect ECNY ecosystem with the payment vehicle, which is Octopus Card in Hong Kong, and also the banking payment system here. And specifically, what you envisage going forward is that many investors, they can use ECNY in Hong Kong through topping their Octopus Cards in the tourist mobile app. I think it's something that is to be looking forward to in terms of enabling southbound visitors to use ECNY in Hong Kong using the Hong Kong ecosystem and infrastructure, which is Octopus Card. But of course, further to that, there will be further enhancements in terms of service offerings by the Bank of China Hong Kong to enable more services to be provided. Finally, I know that I have 5 minutes left. This is just in time for me to go through a more broader issue about the VA and also Web 3.0. We have been asked many times again whether JPEGs will affect our determination to grow the Web 3 market. The answer is a clear no. And the next question to ask is what lies ahead. So this chart basically highlights in terms of the journey that we have taken, try to develop and also grow this segment. If you recall last year in October, the government issued the policy statement on developing VA in Hong Kong. And following that, Julia, who's here, the SFC had a licensing regime for VA service providers, and which has been in place since June this year. At the same time, through the exchange, we already have 3 virtual asset futures ETFs listed. And at the same time, with Eddie's leadership at MA, we have the government green bond being tokenized. The next question to ask is what comes after? So this year's theme, as highlighted, is about fintech redefined. As I highlighted at the beginning of my speech, it's about the linkages to mainstream finance, about our wealth management market, about real economy, about the retail payment, and at the same time try to see what are the things that are available in the market to enable more innovations. Invest Hong Kong, with King's team and also Jimmy's leadership, there's a lot of efforts trying to engage the broader market. And what we see from what we get from the market is that there are a number of key new developments. Number one is about tokenization of real-world assets, or more broadly called RWA. And there are different types of assets that we talk about, like artifacts, intellectual property rights, so on and so forth. But we talk about more assets akin to financial assets, like funds, like other types of securities. We also see more innovation over there, like, for example, tokenization potentially of some funds to enable more timely calculation of NAV, more streamlined KYE processes with digitally verifiable credentials, and also better services in terms of more disclosure of market and product information. I think all these are being talked about and also has been adopted widely by many practitioners here in Hong Kong. And more broadly, for the technology side, we also see how technology can be used, not just in financial space, not just in the asset space, but also in the green space, with like DLT being deployed for the use of tracking and also incentivizing the generation of renewable energy. So broadly, you can say that there's a whole suite of products and ideas being generated. And I do encourage you to really visit these booths and also through Invest Hong Kong, engage these entities who are generating the ideas to see how you can take advantage of that. But of course, with fintech, I think one essential key element of the development is about regulation. And the next question to ask is, what is the regulatory enablement or the regulatory requirements to enable those developments? And SFC, with Julia's leadership, there will be soon issuing some circulars with the intermediaries focusing on engaging tokenized securities related activities, and also a circular on the tokenization of SFC authorized investment products. And at the same time, The government is also working with different parties to consider expanding the regulatory remit to cover buying and selling of virtual assets beyond trades taking place on now regulated trading platforms. And something also in the pipeline, which will also happen soon, is that MA and us will also soon issue a joint consultation on stablecoins, and I'm sure this is something that is much sought after, taking into account the feedback that we received from the earlier consultation. And finally, which is more specific, is that our banking regulator will continue to consult the industry on the guidance in terms of banks providing digital asset custodial services. So all in all, you can see that a lot of things are going on the regulatory front to enable or to further the sustainable and also the healthy growth of this VA and Web3 sector. So a big thank you, and at the same time, even though FinTech Week is only a week, as all of you can agree with me that FinTech is also a journey. So we look forward to embarking on this journey with all of you, with our regulatory support, and also with our business support, and hopefully to see you next year with more to share about our platform and others. Thank you.
And thank you very much, Secretary Hui. The Chief Executive promised great things from you, and that man delivered. Now, Hong Kong's legendary monetary stability is a major key to its success, along with a welcoming and conducive financial regulatory environment. The Hong Kong Monetary Authority is the steward of these mechanisms, and we now welcome the Chief Executive of the HKMA, Mr. Eddie Yoi. Please.
Hey, Eddie, how about a virtual vacation? I have arranged a virtual getaway for you. Let's put on those glasses and hop on board. Look, your favorite artist just unleashed a new masterpiece with this fascinating new AR feature. Wow, with so many elements to play with, let's create something unique. Nice work, Eddie. You've got talent. Welcome to the ocean, where over 90% of life exists. Look, I think we've detected a rare species. Isn't life full of wonderful surprises? I know a good restaurant nearby. Let's treat ourselves to something special. Try this new dish that is trending among foodies. The way you look at that photo tells me you can't wait to get back in action. Let's get ready for this year's Hong Kong FinTech Week.
Good morning, everyone. Welcome to the Hong Kong FinTech Week. And I'm really glad to be here with you in the real world after my avatar has traveled like 3 continents and 2 oceans in the metaverse and having a real good vacation. Now back to this conference. The theme this year is FinTech Redefined. And back in around 2016 when the term FinTech was first coined, and it was also about the time that the HKMA established our FinTech Facilitation Office. The term FinTech used to be a catch-all term, so much so that many of us in the field sometimes we get confused. But over time, FinTech has evolved from a buzzword into an essential part of our everyday life, and so has its lexicon. The industry and its branches have become more specialized and less contrived, and the different functions have become sufficiently distinct from each other to warrant their own terms, their own teams, departments, or even industries. And as a result, we started to see the rise of more defined terms like wealth tech, green tech, legal tech, insure tech, and many more. And it was also around that time that the HKMA also set up more specialized teams. For example, we now have our reg tech and sup tech teams in order to tackle more specific issues in greater depth. And fast forward to today, against the backdrop of very rapid advancement in technology like AI or blockchain, and also drastic changes in the macro environment, including, for example, the post-pandemic challenges, the global slowdown in the economy, the still high inflation trajectory, it actually makes sense to revisit the term fintech to see if we need to calibrate or update the definition, or whether there are certain aspects that we need to reinforce. As you all know, the HKMA has been on the fintech journey for over 7 years now. And today, I would like to take the opportunity to share what we've learned from this journey with you. And I hope that will contribute to our collective understanding. First, through our fintech journey and for all our fintech projects to bear fruit, we cannot stress enough the importance of long-term commitment. And by that, I mean the need to really put in years of hard work and sustained investment. And let me explain. For the parents in the audience here, when it comes to think about paying school fees for your children, just think about it. When was the last time you were using paper check for that? And I believe many of you will be increasingly relying on apps like eClass so that you can pay the school fees and other fees to the schools in a quick and immediate way through the faster payment system in Hong Kong without even having to leave the app environment. And also think about when you last paid your utility bills or management fees. Did you just use the FPS QR code printed on the bill to pay for it, or do you use checks? I can see many of you nodding in agreement, and for those of you who are still using paper checks, I think you really need to think about catching up with the digital age. And I once read that bamboo remains mostly unseen for almost 5 years when they developed the extensive root system under the ground. But when the time is right, I was told that it can suddenly burst into the air 90 feet high in just 2 months. And I would like to think that the same phenomenon probably applies to fintech, and the FPS is a good example. When it was first launched, it was not an overnight success. Its popularity today is the result of years of hard work and also perseverance. Winding back to 5 years ago when we first launched the FPS, the primary focus was on facilitating P2P payments. And because of the more limited functionalities and also the challenge of overcoming user inertia, for example, you've been using paper check for many years, the FPS was actually not an immediate overnight success. But we remain committed to investing into the platform and introducing new features to meet the user demand as it evolved. Over time, the public was now able to use the FPS for different purposes, like the ones I talk about, paying school fees, paying bills, management fees, and also topping up your e-wallets, and also making payments to merchants. So the users have been really varied and diverse. And the introduction of all these new features, combined with the impact of COVID, which almost forced us to get digitalized, it resulted in a big surge in the FPS adoption since early 2020. But I would like to stress that our FPS journey will not stop here. We are continuing our efforts to expand the functionalities, including about cross-border payment. And I'll talk a little more about that upcoming feature a bit later. The second point I would like to make about our fintech journey is that fintech is more than just the convergence of fin and tech. It's much more. It's an interdisciplinary subject that intersects with other fields. For example, law, sociology, politics, economics, and more. So in order to move fintech forward, we need an interdisciplinary mindset and approach. And how is fintech a cross-disciplinary subject? Think about your most recent travel. Were all payment methods, including cards and cash, were accepted in your travel destination, whether it's Thailand, Japan, or China? Or were local payment apps the only options? Did you encounter any challenges when setting up or topping up your e-wallets across the borders? So in that sense, payments actually extend beyond the boundaries of finance and technology. They intersect with financial inclusion issues, things like user experience or even cross-border regulatory frameworks. And in order to elevate payments to the next level, we need to consider these matters from different angles. For example, from a social science angle. Or think about the virtual asset space. I believe that for fintech enthusiasts like yourself, you must have explored some investment in the virtual asset space. Which channels did you use for your investments? How confident were you in your investment decision? Again, these matters extend beyond the realms of finance or technology. From the investor's point of view, investment in virtual assets is very much about customer protection and trust. And for the intermediaries selling and distributing the products and services, on the top of their mind, what they need is clarity in regulation and standards. And these concerns will need to be looked at from legal, policy, and regulatory perspective. And I've mentioned earlier that in order that we can move fintech forward, a cross-disciplinary mindset is essential. And I believe that the most effective way to achieve this mindset in any organization is collaboration. It's the need to foster collaboration with the bright minds from diverse fields. And to me, fintech is by nature collaborative and not competitive. And it is focused on opportunities and not threats. So how can we put collaboration into action in the fintech space? I would like to look at it from two angles. One is cross-sector collaboration, and the other is cross-border collaboration. Cross-sector collaboration holds immense value because each sector can focus on doing what it's best at, in turn maximizing the overall efficiency of any project. One example is the Hong Kong MA's Open API initiative that many of you are familiar with. We published the framework back in 2018 and have been monitoring its implementation. After we published the framework, it was the Association of Banks that put out the API standards afterwards. And with the standards and the framework, it was the banks that actually implemented the APIs in accordance with those frameworks. And then the third-party service provider can use the APIs to offer very innovative service. And even the science park can use the API information for reference of their coding developers. So this is a very good example of how collaboration from smart people in different sectors can drive success, with each focusing on their own areas of expertise, but with a common goal, and in this case, is the adoption of the API. Another example is the digital asset initiative. And I mentioned earlier that in the digital asset space, investor protection is crucial, and it needs to be examined from legal, policy, and regulatory perspective. And this is an area where the HKMA has been closely collaborating with our other regulator, the Securities and Futures Commission, in order to provide clear guidance and standards to the industry. We have already rolled out investor protection measures in order to ensure that the intermediaries, including the banks, have a very clear understanding of their responsibilities when they distribute digital asset products and services. The aim is very simple. It is to make sure that the investors understand the relevant risks and they are prepared to bear them when they invest in these digital assets. The second area is cross-border collaboration, which is growing increasingly important because cross-border activities are becoming more frequent. In my view, we have a much better chance to solve the existing banking pain points when central banks work together. And as I mentioned just now, I will illustrate this point with a preview of an upcoming feature of the faster payment system. The HKMA has been collaborating closely with the Bank of Thailand to link up our two FPS together. Ours is faster payment system, and theirs is called Prompt Pay. And I'm very pleased to announce that starting from the 4th of December, about a month from now, the two central banks will jointly launch a new service called FPS Cross Prompt Pay QR Payment, so that in December and in the coming Christmas and New Year holiday, when you visit Thailand, you can actually use your FPS wallet to scan and pay over 8 million prompt pay merchants around Thailand without really having the hassle of exchanging Hong Kong dollar to Thai baht beforehand. It's that much easier to do it right there with your mobile phone, with the FPS, and with the exchange conversion taking place right at the transaction point. And in the other direction, of course, Hong Kong FPS merchants can also accept, Hong Kong FPS merchants which accept QR payments, they can also benefit by being able to receive prompt pay payments from Thai tourists coming to Hong Kong. And for the last 10 minutes, I've talked about the evolution of the fintech definition and also share some of the things that the HKMA has learned from our experience. And before I close, I would like to take a moment to share a few thoughts about the shape of things to come in the next 5 years or so. Of course, I won't have a crystal ball, but there are 3 areas that I would envisage very quick developments in the next few years. First, I believe that the cross-border payment landscape will undergo significant improvement, both at the wholesale and retail levels, making payments that much easier and faster. And zooming into the ASEAN region, for example, on the wholesale level, I would expect that the mBridge platform that is also co-founded by the HKMA will be operational by then, and it will be settling a good volume of international trade in almost real time. And at the retail level, the private sector, of course, will continue to roll out very novel cross-border payment solutions, and I believe that more central banks will establish bilateral connections between their instant payment system, like the PromptPay FPS linkage. And in fact, with the potential launch of Project Nexus, coordinated by the BIS Innovation Hub, it is a project that aims to connect different instant payment systems around the region in a multilateral way. And if that is launched, cross-border payment will become even more convenient and affordable to both individuals and business alike. And the second major area that I think there will be fast development is about the use of data. It will certainly become much more extensive and diverse. In Hong Kong, I believe that a more vibrant data landscape will be established when the government creates a new data policy office, which was announced just last week by the chief executive in his policy address. And also, it will be much more better with the convenient and orderly flow of cross-boundary data within the Greater Bay Area. In addition, the launch of a government-led data sharing initiative, which will be implemented by the end of this year, it will not only enable easier data sharing among government departments, but it will also allow the banks to have the ability to access more government data through the HKMA's commercial data interchange. And these government data, including, for example, the corporate information of registered companies, the business registration particulars, and importantly, tax-related data, they can actually have the potential to greatly facilitate the bank's operations, including, for example, credit assessment, customer due diligence, or risk management. And this rich data landscape, combined with the financial institutions' responsive use of AI, I believe will further magnify the transformative power of data and also the computing power. And third, in fact, one of the more important areas for me as well, I believe that the pace of blockchain innovation, especially tokenization, will increase in the next few years. Today, use cases such as the tokenized bond has already gone beyond the proof of concept stage and have been already adopted in real transactions. In fact, we ourselves assisted the government to issue the world's first ever tokenized government green bond earlier this year in order to demonstrate the compatibility of Hong Kong's legal and regulatory environment with this very new issuance format. We are already discussing with the industry to explore the next tokenized issuance in order to open up new possibilities. And moving forward, we can expect a rise in the tokenization of different assets. And in order to support the gradual adoption of tokenization, I will also expect that there will be increased use of blockchain-based payment methods, including things like stablecoin wallets or tokenized deposits offered by the banks. And I also share the view that central bank digital currency, CBDC, can usefully serve as a foundation layer, providing stability and perhaps facilitating the transfers between different wallets or between different payment methods, or being an interface between the traditional and blockchain-based payment platforms. But that said, despite all the promising signs, there are still a lot of challenges ahead. For example, we will need to address questions such as how should we really define legally tokenized securities, or whether DVP can really be achieved for tokenized securities. Not to mention the very complex legal considerations and also interoperability challenges that are already under discussion in the central bank community. As I said, nobody really has a crystal ball about what will come and can say for sure what will happen in the future. But we can be certain about one thing, that fintech will continue to be a continuous, cross-disciplinary, and collaborative long-term commitment. Thank you very much, and I hope you will enjoy the FinTech Week. Thank you.
And thank you very much to the Chief Executive of the HKMA, Eddie Yu. As a parent who pays school fees, as someone who travels, I love how Eddie can take the world of high finance and monetary policy and make it real for everybody. It's a real skill to be able to do that. Now, many of you know, but some of you who are visiting from afar might not know, that Hong Kong is part of a larger agglomeration of cities in the region called the Greater Bay Area. And just up the Pearl River is the capital of the province of Guangdong, a city called Guangzhou. And so we are pleased to welcome now the director of the Guangzhou Municipal Local Supervision and Administration, Mr. Chu Yitong. Mr. Chu, please join us. Welcome to the stage. Cheers.
感谢主持人充满激情的邀请 ，Thank you very much。尊敬的张行长、各位来宾、朋友们，大家好！很高兴参加2023年香港金融科技周。香港国际金融中心名誉全球，与纽约、伦敦齐名，并称纽伦港。本次活动是年度全球金融盛事，汇集了来自世界各地的行业翘楚，围绕金融科技领域热点话题发表真知灼见。随着数字经济的蓬勃发展，金融科技已成为金融业助力实体经济高质量发展的重要抓手。广州是千年三都，国家重要中心城市，粤港澳大湾区重要引擎。在数字技术的加速驱动下，广州金融业数字化水平持续提升。借此机会，我向大家介绍一下广州金融业及广州金融科技发展情况。一、广州金融业发展势头良好。近年来，广州扎实推动共建粤港澳大湾区国际金融枢纽，金融业支柱地位不断凸显，已成为全市第4大支柱产业和第5大税源产业。2023年上半年，全市实现金融业增加值1410亿元，规模居全国各城市第4位，同比增长7.8%，增速居北上广深京豫6大城市第1位，占 GDP 比重9.99%。截止9月末，全市本外币各项存款余额8.55万亿，本外币各项贷款余额7.52万亿。1到9月实现保费收入1420亿元，全市金融业总资产突破10亿万亿元，现有上市公司230家，总市值超3万亿元，累计募资超6000亿元。 广州金融业具有以下5大特点：一是金融机构主体高度集聚，广发银行、广发证券等一批具有全国影响力的金融机构布局广州。目前，全市持牌金融机构达360家，其中法人机构59家，纳入名单监管的地方金融组织近400家。2、国家级金融市场交易平台运行良好，广州期货交易所揭牌运营，工业硅碳酸锂期货期权正式挂牌上市交易，成为我国首批新能源金属期货品种。截止10月末，广州期货交易所工业硅期货期权成交量超2000万手，成交额约1.2万亿元；碳酸锂期货期权成交量约1000万手，成交额超1.6万亿元。3、国家级金融创新试点成效明显，广州市立式金融改革创新试验区建设加快推进，目前立式贷款余额超9600亿元，累计发行各类境内立式债券超1400亿元，开展跨境贸易投资高水平开放以及跨境理财通等多项试点。QDLP 试点审批额度20亿元 ，QFLP 试点审批余额超120亿元。4、南沙金融综合实力不断提升，我们落实国务院南沙方案，打造全国首个国际金融岛。国际金融论坛永久会址正式竣工并投入使用。民族金融创新集聚区已入驻近50家机构，累计取得80多项金融创新成果，形成跨境金融、航运金融、立式金融、金融科技等特色金融体板块。5、金融对外交流合作不断扩大。中国广州国际金融交易博览会已连续举办12届，是国内首个获全球展览业协会认证的金融展会。国际金融论坛 IFF 作为非官方国际金融公共平台及战略智库，已连续7年在广州举办全球年会。上周我们刚刚成功举办了 IFF 20周年全球年会。总体说来，广州金融业实力雄厚，创新氛围活跃，发展环境良好，为金融服务智能化、风控精准化、产品个性化提供了广阔的应用空间。2、广州金融科技发展成效显著。广州围绕打造数字金融标杆城市规划部署，出台系列金融科技扶持政策，落地一批国家级金融科技领域创新试点，建设数字金融发展集聚区，设立一批数字金融创新平台和专业组织，营造富有活力、勇于创新的金融科技生态圈。具体包括5个方面内容：一是加强顶层设计，广州金融科技政策支持力度不断增强。广州金融发展“十四五”规划提出打造数字金融标杆城市的战略目标，加快推进金融科技各项重点任务，完善市区2级金融科技发展支持政策。2、积极开拓创新，一批国家级金融科技创新试点运行良好。一是持续深化中国人民银行金融科技创新监管工具应用，自2020年以来，已落地12个金融科技创新项目，推动开展 资本市场金融科技创新试点、数字人民币试点，在衣食住行等9个民生领域和重大活动、政务、服务等14个特定领域落地特色应用场景。3、强化要素聚集，广东数字金融产业园加快建设。广东数字金融产业园作为广东省广州市天河区3级建设的数字金融创新重点工作平台，于2022年12月28日正式挂牌运营，已入驻广州湾谷数字技术公司、中山大学国家级实验室、国家超级计算广州中心、广州数经营、广州地方金融数字安全运营创新中心等一批金融科技主体、科研实验室、创新应用平台，努力打造金融加科技加产业加人才的数字金融生态圈。4、构建4联8柱，一批数字金融创新平台和专业组织先后设立，设立广州数字交易所、广州市数字金融协会、广州数字金融创新研究院，构建地方金融组织5链协同体系，为实施智能监管、强化征信服务、优化风控手段等提供有力支撑。5、不断优化环境，数字金融发展氛围良好。近年来，广州市开展以数字金融为主题的一系列活动，一是举办金研脸数成金数字金融创新案例示范活动，举办风险管理和金融统计论坛，举办2023年南方金融科技创新论坛，全面展示广州金融科技创新发展成果。3、着力构建广州金融科技生态体系。展望未来，广州将从集聚各类金融科技要素，建设广东数字金融产业园，促进金融数字化转型等多个维度，打造广州金融科技生态体系，全面赋能广州金融业。一是引导各类金融科技要素加快集聚，进一步加大金融科技支持力度，对符合条件的金融科技机构给予最高1000万元的奖励，鼓励国内外机构在广州设立金融科技主体以及金融科技认证、数字金融研发等配套设施平台，深入推动资本市场金融科技创新等一系列创新试点，丰富数字人民币应用场景，加强与港澳地区高等院校、金融机构、科技企业的资源协同与产学研深度合作，会同香港特别行政区财政事务及库务局推出湾区专上学生金融科技双向实习计划，培养一批金融科技复合型人才。2、加快建设广东数字金融产业园，将广东数字金融产业园打造成为广东省建设金融科技先行示范区和广州创建数字金融标杆城市的一张新名片。3、支持金融市场主体开展数字化转型，推进广州地区银行、证券、保险等金融业态数字化转型，鼓励小额贷款、融资担保、商业保理等地方金融组织加强金融科技赋能，提升数字化经营能力。一直以来，广州积极深化穗港金融合作，以南沙方案、一带一路建设、粤港澳大湾区建设为抓手，以机构互市、 体系对接、市场联通为核心，推动穗港金融协同发展。香港金融科技领域人才云集，生态资源丰富。未来我们将积极加大对金融业的扶持力度，营造优良的营商环境，吸引境内外金融机构总部、金融交易平台、金融科技公司等市场主体来广州发展。我们热诚欢迎各家金融机构、金融科技公司及金融人才来广州走访考察，实地感受广州城市新变化、新面貌，共享广州经济金融新机遇、新发展。最后，预祝2023年香港金融科技周活动取得圆满成功，祝各位来宾朋友们身体健康，家庭幸福，万事如意。Thank you very much.
谢谢, thank you very much, Director Tu, for your presentation. Now, earlier I talked about the Greater Bay Area, and another one of the great cities within the Greater Bay Area is just north of the Hong Kong boundary, and that is the magnificent city of Shenzhen. It is home to many of China's greatest technology firms, major financial institutions, and 14 million people. And so we are happy to welcome on stage right now the director of the Shenzhen Municipal Financial Regulatory Bureau, Director He Jie. Please, Director He.
各位来宾、各位朋友，应该是我第4次或者第5次参加香港金融科技周了，所以非常感谢主办方能邀请我，能跟大家分享一下深圳经济、金融以及金融科技的发展状况，并且对下一步深港金融科技领域的合作进行一个展望。深圳呢，这个历史很短，43年，它是一叶之城，年均经济增长20.3%。也是党和人民在一张白纸上的精彩演绎。同时，深圳它是一个高度集约化发展的城市，人均 GDP 中国内地最高。同时，深圳还是一个绿色发展之城。我们那个公园大概绿化率50%，有1200个公园。在5年前，全市就已经实现电动车和出租车的纯电动化。并且深圳是一个年轻的城市平均岁数只有32.5岁管辖人口已经突破2100万人。同时，深圳是一个创新力极强的一个城市。现在全社会的研发强度达到了5.8%，而全中国大概是2.5%。我们的国高企业在全中国排第2位，我们的国家级专精特新小巨人在全国也排第2位。我们 PCT 的专利申请量连续19年排中国的第1位。并且深圳的新旧经济增长的动力正在快速切换之中，7大战新产业占 GDP 比重已经超过41%，特别是新能源汽车和储能产业已经异军突起。深圳的储能企业已经达到了7000多家。同时，深圳是一个靠市场化、民营经济驱动的一个城市金融也是一样，刚才说经济年均20.3%，我们金融业增加值年均大概21.1%，所以基本上是一个同步的发展的。我们的存款余额已经突破13万亿，贷款余额已经突破了9万亿9万亿。在全球金融中心城市的排行里头，深圳大概最近一期排名大概全球第12位，它这个是很多是属于主观的一种打分所以中间也有些波动有一些波动。但是我要说，我们发现在深圳，在所有金融机构的细分领域里面，龙头企业似乎都在深圳。大家可以看一下招商银行最好的股份制银行是吧？微众银行最好的民营银行是吧？招联销金是全国31家里面最好的消费金融公司，包括的其他都一样。所以我想这个不是一个偶然的，一定靠这个市场化的土壤，靠这个强大的一个市场机制的一个驱动力成了深圳经济发展的主要动力。回到金融科技，金融科技呢，我们应该说也是亚太地区金融科技的领跑者之一。 在最新一期的全球金融科技的这个指向的排行里面，把深圳排在全球的第4位。这个更多也是靠专家的主观打分。为什么这么讲？是领跑者之一。第一，深圳有一批巨型的金融科技企业，包括平安科技、腾讯金科、微众银行、招商金科。像微众银行，它是全部是服务于常委客户的一个银行，是吧？是一个普惠的银行，它比均贷款只有7000多块，但是每天的交易，大家可以能想象到，大概每天成交是6亿笔，6亿笔。平安科技连续3年，它的 PCT 的国际专利申请量都是全球的第1位，它的微表情技术、人脸识别技术、虹膜技术也是全球最为领先的。第二个，我想说，深圳有一个完整的金融科技生态体系央行的数字货币研究院、国家的金融科技的测评中心。最近央行在深圳也弄到一个服务于中小金融机构数字化转型的金电云，还有一个全国第1个面对个人的一个市场化征信公司百行征信。我们还有监管科技研究院，我们也在全国率先成立了金融科技伦理委员会。没有底线的金融走不远，没有约束的科技很危险，是吧？以前前面几个讲者都讲到，科技是要有伦理的，并且我们在深圳也打造了好几个金融科技的一个物理聚集区。第三，我想说，深圳有一个丰富的金融科技的应用场景，大家可以看一下，包括跟香港的合作，那个贸金平台，包括我们平安一账通在东南亚也包括在香港业务的开展等等。应用场景里面，我想在深圳每年我们会拿出2600万来进行金融创新成果的评奖。现在我发现90%都是金融科技，所以无科技不金融已经成为全球的共识。所以这个金融科技的运用，一个是监测科技 monitor， 所以监管机构应用的科技在深圳已经在很多监管机构已经应用非常广泛了，包括深交所的大数据的筛查内幕交易、操纵行为，是吧？包括我们金融局的对非法集资的一个跟腾讯一起合作开发的一个非法集资的一个早识别的一个系统，包括招商银行这叫合规科技 compliant tech， 就是满足监管机构要求的应用的科技，是吧？包括信用卡的欺诈的一些识别系统，嵌入到业务之中在深圳做的都非常好。第三个，今天咱们特首还有这个张行长都已经提到，金融科技还要赋能可持续金融、普惠金融，包括社会金融，在深圳做得非常好。我们有一大批社会金融的案例在全球进行推广。举2个例子，比如说招联销金，针对那些弱势群体，是吧？他很难有其他的一些资产可以抵押，但是就拿出这些这个自证有36个证明，自己证明很快的进行一个识别或诊断，来给予贷款。中信信用卡一个探账户现在已经跟银联一起推广到整个银联系统了这里边我特别要提到一个，我们推出了跟联合香港金管局、澳门金管局，后来加上香港财富局、深港澳金融科技司的专才计划。从19年开始到现在几年的时间里面，效果非常显著。1级持证人已经2300多个，2级持证人已经200多个，是吧？我们拿出了人才的支撑计划，是吧？考过以后，在深圳市人社局就认定为金融科技的工程师，我们市里面可以补贴1万块钱，区里面可以补贴1到3万1到3万。所以我们也希望香港的年轻的一些从业人员，包括学生，能够积极来进行1级和2级的考试。我还想说，我们深港的金融科技的合作在很多领域已经展开，比如说我们跟香港财库局今年合作的，动员香港的大学生到深圳金融机构来实习。昨天我去了彭博社，他们也有一个慈善项目，也今年也准备推广到大湾区，双向的一个挂职实习这种计划挺有意义的。还有一个，我们深圳市每年拿出600万单项的对香港的机构进行跨境的金融的这个合作进行奖励，所以包括香港的转数快，包括这几个什么澳车北上这些项目我们都给予了奖励。当然还有一批我们深圳的金融科技企业也在香港进行展业包括我们8家虚拟银行有2家深圳的发起人，还有中证鹏源等等在香港的业务都进行了拓展。 我想未来的深港金融科技的合作，第一，深化深港澳金融科技专才计划，这是全球第一个专才计划，也是一国两制背景下人才标准一致化的一个重大的突破。我在很多年以前就发现，香港的人在我们深圳的金融科技，好多的掌门人都是香港籍的，并且在大湾区职业的现象非常普遍啊，非常普遍。当然，我们还有一起呢联合举办深港金融论坛啊，特首已经宣布了，深港有个金融合作委员会，是吧？下一步还要举办深港金融论坛，还有金融科技周的合作。像这一次的金融科技周，我们深圳就组织了10多家企业。我们到月底还要举办深圳的金融科技节，也会开放一个香港日啊，有一个大湾区啊，这个金融科技联盟来推香港的科技企业跟我们资本来进行一个对接。当然，学生的实习项目要继续推动。还有深港合作的跨境的很多问题都可以纳入我们深港合作委员会来进行探讨。所以我最后再做一个预告，我们在这个月底也会举办，可能在29号这2天要发布，举办深圳的第2届的金融科技节。金融科技节不光是一个论坛，还有一系列的配套的一些活动啊，配套论坛，还有金融科技展。是吧？还有金融科技大赛，大赛就分2个，一个是针对学生的，第2个是面向全球，针对青年创业家的啊。我们去年搞了一次，效果都非常好，所以也希望各界人士予以关注。今天就分享到这儿，好，谢谢大家。
Thank you very much, Director He, for coming down from Shenzhen to join us here today. Progress does not happen without some bumps on the road, whether you are crafting a new technology or new regulations to deal with the forward march of innovation. We are now going to welcome the woman who is at the helm of the organization that is responsible for meeting the challenge of new technologies to allow finance to flourish while also protecting investors. She is Ms. Julia Leung, the Chief Executive Officer of the Hong Kong Securities and Futures Commissions, and she is joined today by Mr. Christopher Woolard, a partner at EY. Ladies and gentlemen, please welcome Julia and Chris to the stage.
Hello, everyone. Julia, we've been given the task of trying to think about developments in technology and regulation in 15 minutes. You and I have sort of spoken about this, I think, for about the last 10 years. So we're going to have to really sort of compress ourselves. And I was only going to talk about 2 subjects that we know all the market is talking about, really. So tokenization and then AI, and how do you think about those from a regulatory perspective? So if we start with tokenization, I mean, there are some developments here, obviously, in Hong Kong that I think it'd be great just to be able to talk a bit about, but also what's the SFC's stance? How are you thinking about this? How are you thinking about the opportunities, but also how you manage some of the risks?
Like 3 years ago, the concern among TradFi and that DLT would actually dominate and also upend the entire industry with the technology. And stablecoin is going to undermine the function of fiat currency as a media of transaction. Now, the views now is more realistic. This is not going to be revolutionary. It would just be evolutionary as the Web3 ecosystem needs time to build up. But this is definitely coming. As you've heard Eddie and you've heard Secretary Hui, we've seen quite a lot of real use cases of tokenization already. a bank, a Chinese bank has issued digital structured notes. A licensed SFC licensed asset manager has issued funds, a private fund which is invested in real estate property in Hong Kong. You will hear more about it in the next few days. There will be more to come. Now, tokenization of a fund or a bond, it doesn't change itself. It's just a technology wrap around funds and bonds. It doesn't change the nature that this is security. And as securities, it will be regulated as such in its primary issuance as well as the secondary market trading. But we do, as a regulator, see potential benefits of tokenization, in particular in increasing the efficiency throughout the product life cycle, which is from issuance to clearing and settlement to transfers, and potentially to the point about inclusive finance, lower the cost of transaction. Now, while we are supportive of the industry, experimenting, making more of these use cases, we also see new risks associated with it in the innovative technology, particularly in the transfer and the ownership and the record keeping of these tokens. Now, later today, we'll be issuing a circular, two circulars, in fact, one on the identifying the risks with this new technology, and also what we expect from regulators, what regulators expect from intermediaries when they are doing the due diligence, doing their transfer or primary issuance of it. We also have another circular that is, if you're thinking of issuing a authorized funds, that is public funds, there will be additional safeguards or the expectations that we have on it. It is all about making sure that the assets are being safely custodied, transferred, and the ownership records are there, because this is, after all, a new technology.
Yeah, and I mean, that's obviously going to be, a pretty big development. In terms of some of the things you already allow, so, you allow an SFC regulated intermediary to offer virtual asset services to a retail investor. Now, that's not a balance that we've seen necessarily in other parts of the world. So talk us through, how did you get comfortable with that? And in particular, having to strike that balance regulators always have to between public protection, but then also allowing, access to the wider market.
Now, our philosophy and our approach is always about investor protection. Now, we get comfortable with retail access to tokenized products or tokens themselves only when the technology is stable, only when the risks associated with these activities can be mitigated and in some cases compensated, and the ecosystem has to be more mature and developed, and most importantly, that we as a regulator can put a regulatory hook on the intermediaries interfacing with the investing public. Now, our regulatory journey started like 6 or 7 years ago, around 2016 or 17, when none of the above existed, all matured enough. So I take an example like the Big Four. If I ask EY, for example, whether you would comfortable verifying the existence of the token itself, I think they took them some time in order to work out the procedures and process and due diligence in order to verify the mere existence. So, but then we noticed that quite a lot of other places would jump on the fray, fearing of missing out on the crypto boom. So we bucked the trend and only allow professional investors in this space for trading in crypto tokens or crypto products, probably only the jurisdiction to set such a high bar for retail assets. Now, in 2022, that is last year, we allow retail access to certain products. Now, if you look carefully at what we allow, it's ETF traded in US conventional exchanges with VA futures underlying. So basically, it's cash settled. Basically, it's trading on traditional exchanges. And so it is with intermediaries which are regulated by us. Through them, they can execute the trade or provide that kind of assets. And we ourselves, a year ago in October, we allow we actually authorized the first ETFs with VA futures underlying. So currently we have 3. Now, same time last year, FTX collapsed. So we plowed ahead with a new VATP licensing regime that makes it mandatory for those VA platforms to get licensed with us. And we also allow retail assets for the first time to trade in our licensed platform starting in June of this year. Now, this is also a time when many jurisdictions kind of pull back and put on, because they had pretty light touch approach. We already have the safeguards which are good enough for retail. And then we put on more additional safeguards. For example, when you onboard a client, you have to do suitability, you have to assess their risk appetite and put on position limits. You have to have a crypto emittance governance framework to emit and only emit those large and with large market cap tokens. So all this, that's why we are comfortable to allow trading, which is currently going on now.
And I suppose just one last thing on tokenization. I mean, we know from certainly talking to our clients globally, there's still quite a lot of the story to come. There's still going to be quite a lot of developments in this space. So, I mean, can you just give us a simple version of what your attitude is towards how you're going to engage with the sort of the development of tokenization and sort of, you know, Web 3.0 more generally?
We think that development and regulation go hand in hand. Particularly in this space, you find that traditional finance, they operate on a traditional operating system. And then the virtual assets with the gamification, they operate on different operating system. They don't seem to meet. So with regulation, we can tell the traditional finance where the red lines are, and through this, they are able to actually try and pilot with the virtual assets. And it is only when the TradFi and the DeFi and the new world, the fintech startup, when they meet, can we actually build an ecosystem which would allow a greater use of and also more inclusive transparency and all the good things that come with, is potentially that come with the use of DLT in financial. Now, when TradFi, the reason why it's important to get TradFi into the space is that because when they come in, the demand for institutional grade custody, institutional assurance standards like smart contract audit, they will all come in because that's where regulators and institutional clients would be comfortable. If you don't have those ecosystem, those assurance, those audits, they won't come in. So that's what is happening. So until now, I take an example. Until now, we basically said intermediaries, to tell the intermediaries who are dealing on behalf of their retail clients or clients, that when they deal through the licensed trading platform, their customers can only deposit cash to buy those tokens. And when those tokens are actually liquidated or sold, they could only take back the cash, which is a kind of restriction because if I'm sure the clients would like to hold on to the tokens through the e-wallet. But in so doing is because the intermediaries do not have to deal with, those intermediaries are traditional finance, traditional brokers or traditional banks. So they don't have to have a custodian arrangements for those assets. Now, if those of you who've been following our circular, the joint circular that we issue with the HKMA, 2 weeks ago, we updated the requirements which allow crypto in and crypto out. That is, clients can bring crypto in, and when they bought the crypto, they can also take it out, provided that the cryptos are custodied with SFC license platform or in a bank authorized by HKMA. And HKMA will provide guidance to banks when they're operating a custody system. Now, custodian system is a key part of infrastructure. And another key piece in this will be stable coin as a means of payment in real world economy. And the HKMA was also concluding on that on top of what Eddie just said about the CBDC. So you see a pattern here. We take a building block approach in encouraging the development of the ecosystem for Web3. So it's one that's led by the industry. That is, only you can know what is in demand and what the customer wants and whether they want that customer experience. And when you come to us, our fintech team and our SFC, then we look into the innovative technology or their business proposal, and we identify risk, and we see that, and we'll provide very clear guidelines on the expectations when you are dealing with it.
Very good. Now, at the start, we said time was never going to be our friend, and it's not. But I wanted to put one last question to you. So, enormous amount of interest around AI, particularly generative AI. Now, to some extent, not a new issue. I mean, we've had very large models and systems being used for many years, but this latest wave promises, power and strength in a way that we haven't really sort of encountered before. Lots and lots of global interest. The US and UK saying more about how they think about regulation this week. What's the SFC's view? And I know it's a bit unfair because I'm asking you to do a huge topic in like 2 minutes, but it'd be great just to get that sort of sense of approach.
There are two aspects to this question. As a regulator, we are very, very excited about AI, and we established a data analytics group within the SFC a few years back to explore the use of machine learning and AI in our surveillance, which is important, in our investigation, and also into different areas of operation to improve, and it has improved productivity and efficiency. Now, with the arrival of generative AI, we are also assessing the use of it in our operation and leverage on this technology. But we are considering the use cases very carefully because we're well aware that there are things like hallucination risks, which is that they give you very convincing response to your questions, but then it's not clear whether but they're obviously wrong sometimes. Second aspect, which is more of interest to the industry, is what our regulatory expectations are for licensed firms' use of AI. Now, the use of non-generative traditional AI and machine learning, as you say, has been for at least a decade now, and they're usually used in the hedge funds' portfolio construction, in trade execution and post-trade surveillance. Now, we already have quite a number of internal controls and risk management guidance around governance, accountability, transparency, which include, for example, when you are using AI, we will still hold the senior manager of the firm responsible. So we're not going to arrest the AI itself. We're just going to pursue the senior manager to make sure that they can explain, they understand, and they have competent staff, and they do thorough back testing to make sure that they deploy it appropriately. Now, and of course, the quality of data issue and mitigation of biases, these are all part and parcel of existing model risk management framework. Now, all the above actually apply to generative AI, and we expect that to be so. But I think one of the things that generative AI's big difference is the uncanny ability to produce responses to questions which are indistinguishable from a human being. So you're very easily led to believe that what they say is right, is true. So I think it's neat, and we have noticed that trading firms are actually take a very cautious approach right now in exploring how to integrate generative AI into their trading business. But we noticed that it's very popular with wealth management and with the with retail brokers because they're using considering the use of these AI chatbots for customer engagement. Now we're thinking of we actually think that it's time to remind our licensed corporation their obligations of their risk management measures, which, and in particular, in high-risk cases, to consider whether humans should be included in the loop. so that you can always have, so that these things are not automatically going to the customers. Now, at the macro level, G7, G20, they are all talking about the concern is for concentration, concern about because there's a concentration of the service providers, a concentration of these cloud computing, and also if all the firms, and many firms are using the same model, that might be exacerbate the herding behavior that we already see in the increasingly volatile market. Now, I just came back from an IOSCO board meeting, and there was serious discussions about that. But at the micro level, at least what we can do in our licensed corporation and financial institution is to remind them that there should be alternatives, that you should not be over-reliant on one model. There should be alternatives, and there should be contingency planning and risk management. Thank you.
That's great. I'm afraid we're out of time, but that was a really interesting, quick run around, I think, some of the key issues that are absolutely out there in the market, and from the regulator's perspective, you've got to try and set some frameworks for. So thank you very much, Julia, for sharing your thoughts.
Yeah, thank you.
Thanks.
Thank you very much, Chris and Julia, for that great discussion. Now, ladies and gentlemen, the world's great financial centers are characterized by vibrant and adaptive regulatory regimes. And the great centers around the world, they're in constant dialogue with one another. And that is why we are thrilled to have with us today the Chief Executive of the Financial Conduct Authority, responsible for the financial environment of the United Kingdom and especially the City of London. Ladies and gentlemen, here's Mr. Nikhil Rathi, and he is going to be joined today by his interrogator, the managing partner at Tsunami Advisors and the chairman of the FinTech Association of Hong Kong, Neil Tan. Please welcome Mr. Rathi and Mr. Tan. Here they come. Knock him dead, boys.
Hi, everyone. My name is Neil Tan. I'm the chairman of the FinTech Association and also managing partner of Tsunami Advisors. Today we have a very special guest coming out of the UK, Mr. Nikhil Rathi, who's the CEO of the FCA. So, Nikhil, welcome to Hong Kong.
Thank you. Thanks for having me, Neil.
Yeah, absolutely. So maybe what we can do is kick it off as far as the introduction of yourself, and also talk a little bit about what the Financial Conduct Authority does inside of the UK market. So,
sure. So the Financial Conduct Authority is the regulator for conduct, market integrity and competition for the UK financial services industry. We supervise around 50,000 firms, and obviously the UK also has a number of large global wholesale markets as well. Largest market for derivatives, foreign exchange globally. That comes under our oversight. And we're also very keen to sponsor and support innovation, which we'll come on to, I'm sure.
Yeah, absolutely. So yeah, I think obviously we had a number of different announcements here in Hong Kong as far as virtual assets is concerned. How is the UK actually approaching this particular space, from a regulator's perspective, and also how are you working together with Hong Kong to kind of develop this ecosystem?
Sure. So we have three statutory objectives. One is protection of consumers, integrity of markets, and promoting competition. And that underpins everything that we do. And to deliver all of those objectives, our mindset is one which is openness to innovation. So the FCA pioneered regulatory sandboxes. We now have had 57 virtual asset, blockchain-based companies coming through our sandboxes. We have advisory services for new companies, which we call innovation pathways, which have had 80 or so virtual asset companies coming through there. And that sandbox is open all year round. So openness to innovation, first point. Secondly, as you touched on, international engagement and cooperation. And it was great to see Julia here just now, and I was at the same board meeting she was at in Spain, where we were talking about how we can think about international standards here. Earlier this week, we launched a project with our colleagues in the Monetary Authority of Singapore, in Japan and Switzerland, to think about how we can crunch through the big policy issues on digital assets, around custody, around liability, international cooperation working together. Thirdly, we will always be rigorous on standards around money laundering and financial crime. And that's always been an area of discussion, but we're open to thinking about what the solutions could be there. And finally, the other thing guiding our approach is clear communications to consumers. There's real opportunity for innovation, for benefits, but also it's critically important, and this has been guiding our work on crypto, that consumers are informed and understand the risks. So we've just taken on responsibility for overseeing all promotions of crypto in the UK, and we've put a lot of emphasis on risk warnings, so consumers go in with their eyes open.
Great. And, you know, when we kind of take a look at your priorities and what sort of challenges that you see inside of the marketplace, how are you looking at this type of technology, especially the emerging policies that are inside of the UK?
So we see an awful lot of ideas, an awful lot of potential use cases. And one of the challenges we have is trying to work out where do we devote our resources and which ones do we really try to work through to see what is possible. So we have said recently that we're going to focus with our asset management sector on fund tokenization. We launched a discussion paper with the wealth management, asset management industry to say, in terms of all the technology developments out there, what is it, you know, we should really together focus on? And fund tokenization came up as number one ask out of that discussion. We are also in the process of evolving our regulatory framework for crypto assets. So we started a couple of years ago registering crypto asset platforms for anti-money laundering purposes. That's been a challenging experience. And we've implemented the travel rule in the UK, which allows beneficiary and sender information to be shared for crypto assets. We want to see that implemented globally. We're moving to promotions now, since the 8th of October, and then we have a broader consultation underway as to what the wider regulatory framework should be. Our government has indicated that for stablecoin wallets and custody, that will come under our supervision as well in the next year or so. And finally, we shouldn't forget about the payments angle. There is a discussion and engagement underway in the UK, like there is in Hong Kong, on central bank digital currency. And we are thinking and engaging on what that might mean for the traditional financial services industry, what that could mean for conduct, what that could mean for competition. So a lot of priorities, a lot of challenges.
Right. Yeah, so I mean, what's really interesting is that, you know, of course, before COVID, there was an agreement between the UK and Hong Kong. So we talk about the UK-Hong Kong FinTech Bridge, and we're trying to reactivate that. So, you know, I guess how would Hong Kong companies also look at trying to enter into the UK, and what sort of opportunities are there?
Yeah, I'm looking forward during the course of today and also this evening to meet a number of companies who are interested in the FinTech Bridge, and we pilot these with a number of partner countries around the world. We recognize that for a lot of your businesses, the jurisdictions you're operating in aren't going to give you the scale you need to really make it a commercially viable enterprise. And actually, the real prize for a lot of the technologies that you are developing is the cross-border opportunity, the international scale. But with that comes friction. And what we hope through the FinTech Bridge is partnering between regulators, partnering between the industries across the two jurisdictions, is to work out what those cross-border frictions might be and how we can tackle them. And so certainly I hope that that will be of interest to a lot of the innovative firms, all of you here. And we can see how, if I take, for example, cross-border payments as one example, there are estimates that for some cross-border payments, you could bring down the cost through some of the technology by 90%, which has the potential for literally hundreds of billions of dollars of efficiency globally if we're able to secure that. Tackling some of those issues together is the way forward.
Right. And then, you know, of course, generative AI is actually top of mind these days, right? So I think UK also is taking a leadership position inside of that space. Maybe you can talk a little bit more about what you guys have done inside of there and how you guys are looking at it.
There's a summit happening right now, a leaders summit happening right now in the UK, which is looking at the topic of AI, the huge benefits that are available to our citizens, automation, delivery of more productive services and more productive economies, but also recognizing that there are very significant risks. There are risks in terms of cyber, in terms of privacy, and in terms of market integrity. So I think we approached the question of AI humbly. I mean, it's been used in different forms, steadily increasing over recent years. Machine learning, algorithmic trading has been steadily building in markets and also in consumer-facing financial services. But now we see the ability to accelerate that, to combine that with mass computing power, quantum computing in the coming years for some quite disruptive shifts. Our approach has been to engage with the industry to understand what is going on. We have said, for the time being, we're not jumping into regulation here. What we have moved to in the UK is a much more outcomes-based framework for our regulation. So earlier this year, we put into place what we call our consumer duty, which was the most significant shift in retail financial services regulation in the UK for a number of decades. And that firmly put good outcomes for consumers at the heart of everything we do and everything we expect regulated firms to be doing. We have our senior managers regime, which holds firms, senior managers accountable for delivering the outcomes we're after. And essentially what we've said for now is we want to allow innovation, and we think as long as you're aiming for those outcomes, you have the data, the governance to be able to pause things if you see that things aren't working as they should be. We're not going to get in the way of innovation. I also chair now the Digital Regulators Cooperation Forum in the UK, so we're bringing all of our digital regulators together. So ourselves at the FCA, our communications regulator, our privacy regulator, and our competition regulator. And we are together thinking about how we might approach this question of regulating AI, engaging with the big tech firms. And then finally, we have to have quite an open conversation about markets. Julia touched on it just now in her comments. You can see a world in which AI, automation of trading, which has already been building in terms of programmatic trading, electronic trading across multiple asset classes globally, where in periods of low liquidity or periods of stress, that could amplify market moves, and that can happen across different markets and across the globe. And as global regulators, we need to think about what does that mean for market integrity, what does that mean for price formation, what does that mean for the definition of market manipulation, and how do we get ahead of those issues. So those are some of the things that are on our radar.
Right. And so when you talk about tokenization, I mean, right now, primary focus is really inside of funds, but where do you see this sort of trend going as far as tokenization is concerned, or RWAs and things like that?
And this is a really, that's the million-dollar question, isn't it? So we were talking about this just behind off stage. We're seeing a lot of ideas, a lot of potential use cases, whether that's for funds, trade finance, digital bank deposits, settlements of securities. So far, you haven't seen mass market adoption or critical adoption, and I don't think I can predict really where this is going to end. But what we want to do is have a supportive environment to allow the innovation, to allow the testing, and make sure that where there are regulatory issues, we work through them, whether that's around understanding liability of issuers, making sure that those who have these digital assets have a proper claim, making sure that there is a proper management of conflicts of interest between the different parts of the chain, all of those things we can work through. And then really we have to see what the market wants to do. And which use cases get critical adoption.
Right. And stable coins and the other sort of like the progression in terms of the product propositions and those different things. What's your view in terms of like market development in this areas?
So much of the focus and so much of the interest has been around crypto. But actually you're quite right to say there's a spectrum here. And we've been quite focused on making sure the risks around crypto are understood. We can see the benefits, and we have a rigorous money laundering system in place. We have a rigorous promotions regime in place. But we're also going to be taking on powers to supervise stablecoin issuers and the custody providers of stablecoin. And we can see that as potential use cases. There is constant innovation in the use of money in the development of payments. You see PayPal Paxos stablecoin, which has some potential interesting consequences globally. And I think we all want to make sure that we are providing the framework that enables those innovations to happen in a way which delivers sort of same regulatory outcome for same regulatory risk. So at the point that they become systemic, you can imagine the central bank is going to take a strong interest in it. But prior to that point, where perhaps you're dealing with stable coins that are not necessarily being redeemed at par, or they're being used for investment purposes rather than payment purposes, we'll just want to make sure that there's good clarity for the consumer and robustness in the infrastructure.
So I think that's great. I mean, I think key is how do you balance the, innovation, but also competition, right? So, or be market competitive or commercialization, right? So what are some of the sort of like key measures that you've introduced that kind of make sure that you're innovating constantly, but at the same time, making sure you're safeguarding the markets?
I think that we aim to engage pretty openly with the industry and all the affected groups so that we can understand the kind of innovations that are being developed and thought about, and those firms that are engaging in that can also understand our perspective on risk. And we do that through different means. I mentioned the sandboxes, I mentioned our pathways. We run crypto sprints. So we did a significant sprint last year where we brought dozens of companies together just to talk about the questions around issuance and disclosure, custody, liability. What are the things that would worry us as firms are developing and growing at scale? And I think if we can get in early and firms can understand why we are concerned about particular areas, they can then build that into the development of their products and the development of their technology.
Right. And so, if you kind of take a look at the trends, do you see an intersection between AI and also Web3 or blockchain coming inside of the markets?
I think all of this is coming. So then you can add quantum computing to that list, which is why in the UK, in our Digital Regulators Forum, one of the big things we do is look at emerging risks. And we're looking at that set of issues. We're looking at the whole question of online safety. We are learning as a financial services regulator on some of the issues, for example, that our colleagues in the communications regulator are dealing with on online child safety, where they've seen a prevalence of deepfake and other fraudulent behavior, and that can very easily be transmitted into the financial services world. So I think absolutely we see that trend. The other thing that we would see when it comes to AI, potentially, is you see the alignment of each of the big tech firms with certain leading AI developers and AI firms. And I think Julia talked about it earlier, the potential for concentration risk. And what does that mean if you have all of this data, all of these neural networks concentrated in a small number of firms? How do we think about that as a national regulator, as a sectoral regulator? How do we think about that globally? We'll be taking on, with our colleagues at the Bank of England, responsibility for overseeing cloud infrastructure providers and big tech firms with respect to financial services in the next few years for resilience purposes. But I think that's going to be a very significant issue for us to think about how do we, as financial regulators, work with firms who are not traditional financial services companies but are increasingly systemic for the financial system. Right, so non-banking financial institutions, those types, right? Non-banking, the big tech firms, the infrastructure providers, where traditional financial services providers perhaps don't have the same market power that they might have had over their third parties historically. Right. How do you guys actually work? I mean, coming from the FinTech Association, I think we've worked with HKMA, SFC on a lot of the policy and all those different consultations. How do you work and get the feedback from the markets, from the different associations inside of the UK on your legislation? It's a whole mix of routes, really. So we have a sandbox that's now open all year round, and we're learning by doing and learning what works and also things that don't work. So we have to be ready to fail as well. I've made speeches about failure as well as innovation and success. We have our natural discussion paper and consultation processes. We've run sprints where we bring a number of people into a room for a few days together and just say we can't leave until we've got a few solutions here. We have a lot of exchanges internationally as well. So lots of different routes, but we're always open to ideas if there are things that we could do differently or approach things in a different way.
Right, great. And one final question talking about the key trends. I mean, what's 3 to 5 different trends that you're tracking right now, looking forward in the next 3 to 5 years? You know, how do you see this market progressing, and where do you see are the sort of pain points and where you can reduce frictions?
So I think that we should never underestimate how much small reductions in friction, for example, in the payments world, can drive very significant changes in consumer behavior. So now in the UK, over 37% of payments are contactless. The move to mobile payments has delivered very significant shifts in the way payments are used at point of sale. And so I think that this question of how consumers wish to pay for services, how they wish to store their deposits, I think that could move very quickly. We've seen recently, for example, in some jurisdictions around the world, when they've seen banking turbulence, the prevalence of social media has made bank deposits much less sticky than they may have been in the past. And we could start to see movements of money much faster than has been the case historically. And that's important from a consumer protection perspective. It's important from a perspective of how the deposit protection system works and financial stability and banking stability more generally. So that's one set of issues. Secondly, the point I made earlier around the role of big tech. And how do we cope in a world where there's real asymmetry between the financial services providers and the infrastructure providers in terms of access to data and control of data, and increasingly data localization in some jurisdictions? How are we going to work as a global financial system which relies on global multilateral cooperation, free flow of capital, underpinned by free flow of data, when perhaps there might be some tensions there where data is held or sought to be held within national or regional boundaries? And we're going to have to, I think, confront that question as well.
Great. I'm afraid we're out of time, but thanks a lot, Nikhil, for coming out, spending time with us. And you know, the UK-Hong Kong FinTech Bridge is reopened, so definitely explore that. Thank you so much. Nikhil, thank you so much for coming out.
Thank you very much. Thank you.
Thanks.
Thanks very much. Thank you. Thank you very much.
Hey. Hey everybody, I'm back. Thank you very much to Nikhil for coming all the way from London to join us at Hong Kong FinTech Week. How about that, huh? And thank you to Neil for providing the interrogation of him. You know, we are bringing to the stage now two giants in the world of payments. And they are the ones that are working on taking the creaky and slow world of cross-border payments, and they are building a future of fast and secure international money transfers. They're taking time out of that important work. We've got one from the East, one from the West, coming to join us today. From the West, we have Surendra Chapalat, who is the global head of product for Wise. And from the East, a little bit closer to home, we have Forrest Lin, who is a corporate vice president at Tencent and the head of Tencent Financial Technology. And their discussion today is going to be guided, it is going to be moderated by Benedict Nolans, who is the head of the BIS, the Bank of International Center Innovation Hub, Hong Kong Center. And she is no stranger to FinTech Week. So ladies and gentlemen, please welcome Surendra, Forrest, and Benedict to the stage. Here they come.
Great. Let's kick off the discussion. I'm obviously very pleased to be here with these two giants, as just described, and leaders in private sector innovation in cross-border payments. So maybe we can kick it off with you, Forrest, and if you can give a quick intro to the Tencent vision and where you stand on your roadmap, and let's say how far you've gone in terms of cross-border payments.
Yeah, sure. Yeah, Tencent is an internet company. You know, we have a lot of businesses, social network, games, fintech, etc. So for Tencent Fintech, you know, our vision is financial technology for good for everyone. So this is really our vision. We want to make the inclusive finance as much as possible. And in terms of global payment, we actually have three different businesses. One is for Chinese travelers going abroad to pay for the merchants using Weixin Pay. So we have about 69 countries we covered so far, about 4 million merchants worldwide. We're working with thousands of partners on that. And second is helping the global users to remit payment into China by working with a global remittance platform such as Wise. They are our customer. So we work with about 30 partners, and we help millions of people to remit money into China. And thirdly, we help the China merchants to collect capital when they sell merchandise overseas.
Great. And Surendra, if you can also introduce Wise and its footprint and vision.
Yeah, thank you. Really cool to be here in Hong Kong. I work for Wise. So Wise is a global fintech company which is now listed on the London Stock Exchange. We've been around for 12 years, and our mission is very simple, which is to make money without borders. We want to make cross-border payments instant, convenient, transparent, and low cost for whether it's a simple consumer wanting to send money for their kids' education, a consumer traveling, or if it's a business wanting to collect payments from different places around the world, wanting to manage their expenses or their entire business on Wise. And then finally, we also partner up with various different financial institutions to use our payment rails, the infrastructure that we've built over the last 12 years, which enables all of this, and embed that into their apps. We partner with major banks like Bank Mandiri, ZA Bank in Hong Kong, Shinhan Bank in Korea, and also digital banks such as Monzo, N26 in Europe. And we power their kind of cross-border payments through our infrastructure. We're about 5,000 people in 17 different countries, so still a smallish fintech compared to Tencent, but we feel like we've come a long way in the last 12 years.
Great. So Surendra, could you a little bit put what you've just explained in the context of evolving customer expectations? Like, what are the main trends you've seen, and where has Wise positioned itself in that evolution?
Yeah. So I'm going to start with maybe the founding story of Wise, and that will explain a lot to that question. So, Wise was started by Christo and David. Both of them are from Estonia. They were both in London, and as people in London would do, they were met at a pub, and they were talking to each other. Christo was working in London, getting paid in pounds, and he had a mortgage in euros back home in Estonia. David, who at that point in time was working for Skype, he was the first employee at Skype. He was getting paid in euros, and was living in London at the point in time, so he needed money in pounds to spend for his day-to-day expenses. And what they decided was that they were trying to use traditional financial institutions, and what they found was the cost of making these transfers was very high. A recently published World Bank report says that the cost of cross-border payments is still 6.5%. So that problem is still existing around the world. The speed of making that payment was really, really slow. It used to take them more than 2 days to move that money between pounds and euros. It is still a major problem around the world. Today, Wise does about 60% of their payments, 60% of our payments instantly, which means under 20 seconds. Mm-hmm. And our goal is to get this to 100%. But that's still a major problem for customers. And then the third problem was transparency, which is they would send money and not really know how much would they see on the other side, because there would be many different stops of the money along the way, and then you would get a sum of money at the end of on the other side, which you probably don't recognize. And those 3 pain points of speed, cost, and transparency still remain in the industry. We are only just getting started to solve it.
So in other words, the transparency is not just transparency of cost, but it's also about where your transfer is. Is that correct?
Yes, so transparency can mean many things. One, is it very clear and understandable for customers to see how much are they paying for the transfer? Second, is it clear for them to see when is the money going to be on the other side? Like especially with money, it can cause a lot of anxiety for people that, hey, where is my money, right? Like it's not, if you're playing with anybody's money, anytime it takes anything more than 20 seconds, people will obviously feel more conscious about it. And then when it comes to transparency around how much am I going to get on the other side, because the fees were so opaque, because there was problems in every step of the way, the end amount that a customer gets could be anything.
Got it. Well, I laugh because I about 2 weeks ago had probably my worst experience, which was I'd sent money to a Hong Kong dollar account overseas, but it was actually a US dollar account, so the receiving bank kicked it back. But the bad thing was it took 10 days to come back, so that was really surprising to me. It was there really fast, actually fast, not in 20 seconds, but in half a day it was there. But coming back took a long time.
I can imagine.
Yeah, I can agree more with these 3 pain points from the users. I think I probably will just add one more, which is also what we are working on. Try to integrate it in the scenarios. What do I mean? So I think people actually want the financial services to be embedded in their scenarios. For example, in the global in the remittance world, we think, what if the receiving end, when they receive a message of that money is coming, they can directly click to get the money.
Yeah.
Okay, so say if I send $10 to my friend, I will tell him, right? I will tell him, hey, you please expect $10 coming. And when I tell him that's a message, and if that message is associated with a click to collect the payment, that's seamless integration with the scenario. So that's something that we have been working on. So besides the cost, transparency, and the speed, we think if we can embed that into different scenarios to make the experience more seamless, that would be even more helpful to the users.
Great. So now both of you have a view about previous generations of cross-border payment networks, and that there are some main pain points in them. So maybe we can start with you, Forrest. What is actually causing the pain points?
So yeah, I think the traditional system works very well for traditional wholesale payment. So actually, there was a report from G20, a research report. I think it says very well. If you look at the wholesale payment, which is above $100,000 US, the average time landing from a sending bank account to the receiving bank account, not the agent bank account, the receiving bank account, it's about in 92% of the time it lands within 1 day, and in about 53% of the time it lands within 1 hour. So for a large amount transaction, it's not too bad.
Okay.
But if we go down to more, small amount for the, individuals, for the small medium businesses, that metrics actually deteriorated. So for 1 day, it's about 73% land within 1 day, and about 43% land within 1 hour. But actually, it's counterintuitive, right? Because you think if the amount is smaller and the payment is more smaller, the user would expect a faster processing. And I think that's really where the traditional, global payment system doesn't serve in the new real-time, small amount, high-frequency kind of scenarios really well. And that's something we have been striving to solve and to make it better.
And this is connected to the e-commerce trend.
Right.
Yeah. Do you have a thought on this, Surendra?
Yeah, connecting to what Forrest just said as well. I think what has also happened in the last 10 to 15 years is that there's been a lot of innovation in domestic payment systems around the world. You see it, especially in this part of the world. You have FPS in Hong Kong, you have Pay Now in Singapore, Prompt Pay in Thailand. You can go on and on. Domestic payment systems have moved on to becoming instant and very, very low cost. And cross-border payment systems, because they were relying on correspondent banking services, did not evolve fast enough to be instant. Anytime that you make a cross-border payment through the correspondent banking system, it would hit multiple different hoops, and each of those would add cost. Each of those would would make the payment slower. And what Wise has done is essentially we saw that there are all these domestic payment networks around the world that are evolving very, very rapidly to support the low cost and also small amount transfers very, very efficiently. We built an interoperable layer to connect all of these different payment systems. We today operate in 40 plus different markets, be it a bank account, be it players like Tencent or other payment institutions. We are connected deeply into many such institutions. And what that allows us to offer to our customers is a very seamless way of moving money from, say, Hong Kong to UK. The money can land from their bank account in Hong Kong to the bank account in UK within 20 seconds, because essentially it is two domestic transfers. So money coming into a Hong Kong domestic account, and then as soon as we cite the money goes out from a UK account directly into the recipient's bank account. So and then what we've done is kind of taken all of this payment infrastructure and opened it up for anyone to connect to. And that's what we have 70 plus partners around the world now which have embedded this payment infrastructure into their systems so that their customers now have access to fairly instant and very low cost cross-border payment.
Great.
Yeah, I think Surendra hit a very important point. Indeed, I think it's actually good news for us that all the regional fast payment networks has already been very prosperous. FPS in Hong Kong, Prompt Pay in Thailand, PIX in Brazil, etc., etc. But now it's really, the next step is really institutions need to work with each other to make that cross-border payment as smooth as possible. And I believe this is not a job of one institution or even one central bank, because intrinsically it is a multiple network, multiple financial institutions, multiple jurisdictions need to work with each other. So it needs an open ecosystem, needs an open platform, open protocol. But as long as we have the vision and we have the intention to work closely with each other, we work one by one. We connect two first, then third and fourth. We work in specific scenarios. Gradually, that international high-frequency, low-cost, real-time payment network will start to be interwoven. Yeah. And that is, I think, the future that all of us are working towards.
Thank you. Yes, both of you had raised the importance of these faster payment systems and trying to connect them. And within the BIS Innovation Hub, in the Singapore Center, we do have a project called Nexus that seeks to do this. So as we know, there is, as Eddie just announced, there is a connectivity between Hong Kong and Thailand. Similarly, Singapore has connectivity between Singapore and Thailand, and also Singapore and India. So the Singapore BIS Innovation Hub is seeking to work on a more broader approach or a more global approach, so to say, to connecting these faster payment systems. Yes, so maybe if you could, from your perspective, within that context, if you had many of these, let's say, connected, could you give a vision of how it would improve things for you and consequently for your customers?
So our mission, I think, has remained very consistent. Like we want to kind of, what we look at day in and day out is how do we reduce the cost of making these payments and the speed of making these payments and improve the speed. Today, our average cost for customers is about 0.67%, which if anybody had said that like 12 years ago when we started, it was probably unthinkable. The average cost around the world, as I said before, is still 6.5%. So the way we kind of go about doing this is by connecting directly to the payment infrastructures of each and every country that we operate in. We have directly connected to FPS in the UK, SEPA in Europe, FAST in Singapore, PIX in Brazil, NPP in Australia, and so on and so on. And what we try to do, what this enables us to do is that we control a lot more of the experience for our customers, and then we can also pass back the savings that we are creating because connecting directly. And then we can offer payments which are instant because we can process a lot of the things within a few seconds. Like when a payment comes through, we've built technology that can process a lot of things within a few seconds of checking the payment. Where is this coming from? We run a whole range of checks around frauds and security of the funds, and then passing them on to the next leg of the payouts to the recipient's bank account or any other account for that matter. So I think ultimately for us to get better at dropping this price and increasing the speed, we need to be connecting more and more to these payment systems as they come up around the world. Even in places where these payment systems don't exist, our hope, like for example in the US, there is still no instant payment network. Our hope is that at some point with FedNow or RTP, those things will be resolved. But I think at least in this part of the world, we've seen, because of the regulators being so progressive about making domestic payments instant and low cost, we've seen a very revolutionary change for cross-border payments as well that we can now pass along to our customers.
Yes, actually in the last few days this topic is coming out a lot from visitors, is that really a lot is going on in this region. So it's good to hear when people come and they say that. It's always great to hear. So Forrest, did you want to add some thoughts about this and maybe share some other ideas that Tencent works towards?
Yeah, so for our global payment business, we have a strategy called a 1+1+1. The first one is actually our domestic payment network and the WeChat ecosystem in general, because we're connecting to over 1 billion users and less than 100 million merchants in China. So we are very willing to open up our network to our partners globally to make the global payment, cross-border payment, as smooth as possible. So that's the first one. And the second one is actually the global financial institutions that we're very willing and to work with, such as Wise, such as the global banks, car schemes, etc. So, because as I mentioned, that grand vision is not something that can be completed by one single financial institution. It has to be collaboration among all the major players. So that's the second one. And the third one is actually the scenarios, what we call scenarios. So for example, e-commerce platform is a very important kind of partner that we need to work with. So we work with e-commerce partners to help their merchants, after they collect the payment from customers, remit the payment into China to pay for their supply chain. Mm-hmm. By working into the scenarios with financial institutions, that payment services can be compliant, low cost, high efficient, but at the same time, the user experience, not only from the individual standpoint, but from the merchant standpoint, can be enhanced because they don't need to open another, another financial scenario to work on their problem. They can just work their problem within the scenario. And that's sort of the 1+1+1. Our ecosystems plus the financial institutions globally plus the scenario platforms that we can work with each other.
That's great. So you both make this sound so easy. We ourselves are working on another project, which is the Enbridge project, and there will be a panel this afternoon but I don't find it so easy.
Yeah, but actually, I really appreciate and I really like the Enbridge project. And actually, we have a pilot project on Enbridge as well. I think this is actually very important because central banks, different central banks, if they can collaborate with each other to create a common platform, enabling the real-time networks of the regions to have that landing point among each other. I think that's great because a private sector is very hard to do that. I think it has to be a collaboration between public sector and the private sector. And we really want to ride on the Enbridge initiative and try to offer more scenarios and to enhance the architecture and technology behind, so as to make the flow become more efficient and smooth.
That's great, thank you. So maybe Surendra, to finish with you as well, you had mentioned a recent collaboration with SWIFT. Could you speak more about that?
So I definitely agree with Forrest that a lot of the problems for cross-border payments are to be solved with a deeper collaboration. And that's why we've recently announced our partnership with SWIFT. What that enables financial institutions around the world to do, which have been using SWIFT for quite some time, is to basically change one number and suddenly move their payments to the next generation of payment infrastructure created by Wise. This will then truly enable all of these banks and other financial institutions around the world to support or to offer this next generation of instant, low-cost cross-border payments to their customers. Our goal is that how do we make it super simple for any traditional institution to switch to this payment infrastructure that we've built, because traditionally we've seen that's where the biggest problem for them lies, that it is not very easy for a traditional institution to recreate what we have done. So what we did was we partnered with SWIFT and created a very simple correspondent banking alternative over SWIFT to power this for banks, which quite a few number of banks now around the world are starting to use. And that makes the integration for them as simple as a few weeks, if not a few days. And the second thing I think it also allows us to do is bring transparency to a lot more customers. Like SWIFT has this very cool thing called SWIFT GPI, which allows customers to see where their transfers are and where exactly their money is. This allows us to also, again, bring this power of transparency to millions and millions of more customers around the world. I think, we are all consumers of cross-border payments, and I think as consumers, we do deserve a solution which is inherently transparent, so that you're clear how much you're paying, how quick would the transfer be, and how much is the recipient going to get. And I think, again, with this deep collaboration, we can enable this for a lot more customers.
Thank you. So, so in the transparency, we discussed as well the FX costs. Are they actually part of the total number?
So the way we do this is very, very simple, which is the rate you get should be the rate that you see on Google. It should be the mid-market rate, which is very easily available for you to see anywhere on the internet.
Okay.
And then every institution has to charge a fee, which is fair. But you should not be hiding it in the FX, which is where the lack of transparency comes about in FX generally. There are lots and lots of people, lots and lots of companies around the world that would kind of advertise it as zero commission, but reality is that a lot of the FX fee is hidden in the markup of the exchange rate, and that's what we are asking for. That hey, if you want to charge a fee, that is totally fine. But you, as a consumer, anytime you buy a service, the service provider should be telling you what is fee and what is the cost, or what is the real, what is the real fee of making this payment, right? So that's what I mean, like when I say like FX transparency, like how do we actually publish this out to more and more customers that hey, here's the real mid-market rate of this transfer.
It's like the Uber app where you can see the price of the different cars. Okay, great. That brings us right to the end of our discussion here. So thank you very much for listening and thank you very much for participating. Thank you.
Thank you for having us.
And thank you once again to Forrest, Lynn, Surendra, and merci encore, Benedict, absolument superbe comme toujours. Now, ladies and gentlemen, HSBC is the hometown hero for Hong Kong with the greatest global reach of any Hong Kong bank, so it gives me a special little bit of pride to welcome to the stage today Mr. Surendra Rocha, who is a group executive and the co-chief executive for HSBC Asia Pacific, with a little video to bring him in. Let's have a look.
將匯豐易通財卡啫。如果你喺匯豐開有戶口，就可以免費申請張易通財卡。咁就24小時都攞到現錢，只要將卡放入電腦，打出你所需要嘅銀碼，現金即可到手。話攞就攞，易到單手都搞得掂。請啊！匯豐易通財有如代中錢。
Good morning. That was 1980 when the ATM came to Hong Kong. My name is Surendra Rocha. I'm the co-chief executive for Asia Pacific for HSBC. And we've come a long way since the ATM made its first appearance. Today, it is a privilege for me to talk with you about how we see the next phase of the digital evolution of financial services. I will speak from the perspective of a bank that is traveling the road of digitization, from the perspective of a bank that remains a critical component of the global financial system. There is no question that new technology has made access to financial services faster, cheaper, and easier. For HSBC, our journey in digitization really started in 1967, the year when our first computer, an IBM 360 mainframe, arrived at our head office in Hong Kong. As you can see from this image, just getting it into the building was a major effort. It had a maximum of 8 megabytes of main memory, but the IBM 360 changed how we did banking. By 1980, you could manage your account with any branch of HSBC in Hong Kong, not just the branch where you'd opened your account. And we've seen many cycles of digital transformation since the 360. And now there's a new wave underway in financial services that is energizing economies around the world. Sometimes this journey does feel like a hike through the mountains, or if you're on the MacLehose Trail, where you get to one peak and then there's another one behind it which you need to scale. So in the years following after the global financial crisis, we've seen technology accelerate and disrupt financial services, particularly the payments landscape. We heard earlier a lot from companies that have played a big role in that space, and I'll talk about it a bit from the perspective of HSBC. We are seeing digital payment adoption being nearly universal in many countries now. 57% of the world's population has either received or made a digital payment this year. Of course, China and India are the poster children, if I could call it that, for this revolution. And this has brought costs down for the consumer. It's made e-commerce infinitely easier and more efficient, and really brought more unbanked into the formal economy. Cashless transactions have posted exponential growth and are projected to reach $3 trillion by the year 2030. And all of us as consumers are losing our sentimental attachment to paper money. And the process is accelerating. Even in Hong Kong, payments processor FIS forecasts that physical cash and coins will account for no more than 1.6% of point-of-sales transactions next year. Of course, at HSBC, we share a sentimental attachment to paper money because we have our name on it in most of Hong Kong. When we look at frontier economies beyond the emerging markets, they are also catching up very quickly. In fact, technology is enabling them to leapfrog a generation and move forward. In sub-Saharan Africa, 33% of adults today have a mobile money account, and that compares just to 10% globally as an average. So financial digitization is here, and it is scaling up. As we look ahead, commercial distributed ledger technology, or DLT, generative AI, and quantum computing are emerging over the next decade to drive this next phase of disruption in financial services. There are many questions the financial sector will have to answer as part of this process. How do we move forward and yet protect ourselves against the risks that will come with this evolution? How should we address the opportunity and challenges in virtual assets that bind value and ownership together in one digital token that can be moved around instantaneously around the world? How do we use AI to enhance financial efficiency without setting off crashes? And for all of us seated here today, what role do we need to play ensuring a digital future that is safe, secure, and sustainable? As we consider these future possibilities, we must stay grounded in present realities. At the end of the day, we have at one end 1.4 billion people who still do not have bank accounts, and at the other extreme, we have NFT traders buying and selling monkey gifts. True blockchain can transform the financial industry. Yet at the same time, some cryptocurrencies which have relied on this technology have become flashpoints for volatility and speculative fraud. There has also been an explosion of fraud through complicated new channels, which are hard for investors and regulators alike to wrap their heads around. So there is some skepticism about digitization. As an example, BCG recently in one of the reports estimated that less than a third of the world's largest banks are investing adequately in digital financial ecosystems. In Asia, some financial institutions still use fax machines, ink stamps, which are due to obsolete regulatory standards. So while security is always a concern when implementing new technologies and workflows, this kind of conservatism is incompatible with the way that the evolution is going to happen. And HSBC as a bank, we share the fact that this complacency is not affordable for us as a bank, but also for financial services put together. We at HSBC know that banks cannot sit on the sidelines while innovation happens and changes the market. We hear our investors, our business partners, and our customers demanding transformation. And we have committed to deliver a digital evolution, and we have put a lot of money where our mouth is. And it is starting to pay off. I'm pleased to say that over the last 4 years, as we've evolved our technology, we have seen it come through in our results and in the return on tangible equity that has moved from single digits to now mid-teens. At the end of the day, banking is about helping our customers find new opportunities while anticipating and managing financial risk. These functions are critical for the stability of the world economy. With that in mind, let me walk you through how HSBC and Hong Kong are working together to make this city the world's preeminent fintech center. Firstly, I'd like to just start with some reflection on Hong Kong's history. At the heart of Hong Kong is its entrepreneurial spirit. This is evident in the way Hong Kong has evolved and adjusted to complement the global markets, which it is especially exposed to, and to the economic development of mainland China. Keep in mind that just about 50 years ago, Hong Kong was best known as a low-cost factory town, churning out apparel. Now, manufacturing is roughly 1% of the city's output, and most Hong Kongers work in the services sector. In reaction to the migration of manufacturing to the mainland during the reform and opening movement, which many Hong Kong companies facilitated, Hong Kong has accelerated the development of other industries, in particular finance, and that has worked out very well. Today, the finance sector is the city's sharpest competitive edge. Hong Kong is still China's only fungible hard currency market, with its own currency explicitly pegged to the US dollar. It is exempted from capital controls applied to onshore renminbi assets. And there is also Hong Kong's role in the one country, two systems arrangement. As an extension of this, Hong Kong is able to experiment with the development of the next generation of the digital economy, including blockchain-based technologies and crypto. This government has made technology transformation a linchpin of its broader economic strategy to create new wealth and new jobs for the young in Hong Kong. 700 million Hong Kong dollars has already been allocated to the project on the back of substantial policy support. Therefore, Hong Kong, which is already a global international financial hub, is now positioned to become the world's leading top digital finance hub too. Such an elevation and evolution will naturally play off in this city in our view. And because this sophisticated market is deeply integrated with the world's second largest economy, who also is the world's largest exporter, Hong Kong's leadership in fintech will also benefit markets across Asia and the rest of the world, given the scale of the trade and investment flows that link Hong Kong with the rest of the world. So HSBC is already playing a big role in driving Hong Kong forward. We have 300,000 corporate customers today who bank with us in Hong Kong. We are a leading trade finance and foreign exchange bank here, with roughly about 1/5 market share in the city. Supporting Hong Kong's ambition fits with our competitive advantage and our purpose as a truly international bank. A full spectrum finance industry in Hong Kong will mean that businesses can export and import through a digitally enabled global network. And this will require some initiatives that need to be taken, and I'll lay out some of them. First and foremost, we believe that the establishment of a comprehensive regulatory framework is a prerequisite, especially when retail investors are involved. We believe the principle of same activity, same risk, same regulation is critical. If it acts like a commodity or it acts like an equity, it should be treated as such. But developing specific guidelines requires understanding of the underlying technology, the upsides and the downsides of the same. Some of these technologies have yet to mature. So we are working with financial regulators here, including the HKMA and the SFC, on refining this framework. But in the meantime, we are also building the foundations of an ecosystem. For starters, the Hong Kong University of Science and Technology and HSBC have joined hands to deepen fintech talent development. We are exploring how to apply and monetize solutions ranging from artificial intelligence to quantum computing. Then there are areas where we lead and which is within our wheelhouse. Trade finance is an example. It's a massive market. The aggregate annual volume of domestic and international trade credit today stands at about $35 trillion US. We are the world's largest trade finance bank, as well as a major facilitator of payments related to that trade. In fact, in Asia, today we process 1 trade transaction per second for our customers. Much of the world's trade finance today remains trapped in paperwork. This aggravates information mismatches between counterparties, inflates costs, and increases risk. These are the barriers that small merchants have to face up to as they try to grow their businesses. So digitizing trade finance means greater financial inclusion by lowering costs and increasing accessibility for these merchants. Digital money, backed by central banks or by commercial banks, is an exciting horizon for us, given the potential to increase transparency and efficiency. So are other forms like tokenized deposits, for example. These tokens in asset form have the potential for fractional ownership, allowing small investors to purchase small parts of a whole. Whether it's a corporate bond, a batch of commodities, a new hospital, or a ski lodge in Hokkaido. Today, the HKMA is actively testing the CBDC functions, from payments to tokenized deposits and settlement. And I'm proud to say that HSBC has continuously supported the MA's eHKD pilot program since 2017. We are also helping with the round of trials of the Bank of China's digital renminbi project, or the eCNY in Hong Kong and in the mainland. In fact, just a month ago at the Asian Games in Hangzhou, Hong Kong athletes could download the eCNY mobile app and make purchases at the athletes' village through our HK Fast Payment System, or the FPS. And HSBC was able to support the connectivity together with other banks like Hang Seng, ICBC, and Bank of China. We are also actively developing solutions for institutional investors. HSBC Orion is one example of that, a platform that uses blockchain to facilitate the issuance and transfer of digital bonds. The European Investment Bank launched its first sterling digital bond on HSBC Orion in Europe earlier this year, and we are gradually rolling this service out in other markets and in more currencies. And we will be doing something in Hong Kong soon as well. Issuing native digital assets is important for the development of capital markets in our view, as we move from an analog world to a digital world in the capital market space. Ultimately, we are committed to offering our institutional customers a complete set of solutions, which is why last evening we announced an approach to tokenizing gold, complementing what we are already doing for bonds. Now, one can't talk about the digital economy without covering AI, and this is something that we've embraced over the last few years, and it is having a significant impact on the industry. We are today deploying AI across the board, both from a risk analysis standpoint, but for the creation of new tradable financial products as well, and for trading management. At our booth here, you can see our proprietary AI, HSBC AI Markets tool, which uses similar technology to ChatGPT to help our institutional investors navigate financial markets using both real-time and historical trading data sets. On quantum computing, our innovation team is working with a number of partners. This is an area that can revolutionize financial services in areas like portfolio optimization, fraud detection, and cybersecurity. McKinsey estimates that quantum computing would be a $1.3 trillion industry by 2035, and 2/3 of that will come from finance. Today, we are moving ahead on this technology by joining forces with leading tech providers and research labs to explore the potential for applications to real-world problems. We are also building a dedicated quantum research team at HSBC to formalize our use cases and for deep research projects. We are developing patents and products. So to summarize, HSBC is expending a lot of energy and deploying capital to ensure that we are on top of the latest developments and that we stay on top of our customer needs and meet them. Now, I'm not a futurologist, I'm not a techie, I'm a banker, and I have been that for 30 years. And I've experienced many business and tech cycles through my career. Right? We saw the global financial crisis, we saw what happened through a period of sustained low interest rates, when investors became accustomed to technology entrepreneurs invading and disrupting established industry players. So I'm often asked the question, can a bank like HSBC compete in the future against aspiring disruptors? Could a purely digital bank or some super app make traditional banks like us obsolete? I doubt it. Fintech startups and online lenders remain critical to the digital evolution. They have forced banks like us to change for the better. They continue to do so, and as a global bank, we will continue to tap into this decentralized innovation pool. At the same time, everything that we've seen in the past few years has reinforced the need for a traditional role that banking plays. We are both a consumer and a developer of technology, but first and foremost, we are proudly a bank. And our business is based on relationships that provide liquidity and help create wealth for our clients and our shareholders. From a government or a regulator perspective, recent developments have reinforced the importance of banking stability. Risk buffers have their upsides and downsides, of course, but when Silicon Valley Bank ran into trouble, it was HSBC and other traditional banks that had the cash on hand to step in. We plan to use the UK operations of SVB as the kernel for our new HSBC Innovation Banking service. This service will formally open its doors in Hong Kong before the year end. So in my view, in this new era of high inflation, high barriers to credit, banks like us are ideal partners for many fintech companies. We have the trust of our customers. We have the breadth of business that can support fintechs as they grow, help them meet regulatory compliance, and managing the scope of risk that they can take on. There is a model of coexistence where we become the users of their services and we can serve as platforms for their products and solutions across our network. Such healthy partnerships are also important to regulators around the world so that they can see innovation, bring costs down for the end consumer, and improve financial inclusion. So to conclude, we stand at the foothills of a new era. The digital economy today in Asia gained 4 percentage points between 2010 to 2020. It is now worth over $2 trillion US. But the next 10 years, we are going to see industrial movement up that slope. This will invigorate our industry, the city of Hong Kong, and the global economy. I, for one, and my team are really looking forward to this climb. Thank you.
everyone has their own way to innovate and make breakthroughs. Taking a break doesn't mean slacking off. Work smart, and it's amazing how much you can easily get done. Finding overseas markets difficult to grasp? With the right partner, anything is possible. Technology changes fast. We make sure the latest information is always at your fingertips. At BOCHK, we understand that innovation comes from expanding what's possible. Through agile use of technology, we connect you closer to your ambitions. Understanding brings us closer. Bank of China, Hong Kong.
And ladies and gentlemen, we're back here at Hong Kong FinTech Week. I am Andrew Work and excited to have you all here with us today. I'm ready to introduce our next speaker, who is the financial secretary. And under his portfolio, this is where the magic happens, where they take policy ideas and turn them into a reality through the exercise of the budget. It is also responsible for the financial regulatory environment in Hong Kong. And even these two major responsibilities are just part of the total portfolio of the financial secretary. And so we are thrilled to have him here with us today. Ladies and gentlemen, please welcome the Honorable Paul Chan, Financial Secretary of the Hong Kong Special Administrative Region. Hey, Paul, great to see you. Hey, cheers. Great to see you again.
Distinguished guests, ladies and gentlemen, good afternoon. I'm delighted to be here once again for the Hong Kong FinTech Week. What a global gathering this is. I'm told that the attendance is tens of thousands, if not more. Participants in fact come from more than 90 countries and regions, with over 30 delegations joining either in person or virtually. The theme of this year's FinTech Week, FinTech Redefined. FinTech is not just financial technologies portmanteau. It is also a catalyst for driving change and innovation, for making financial services more accessible, inclusive, efficient, and user-friendly. It is about bringing real impact, positive impact, and tangible benefits to people's lives. The FinTech ecosystem here in Hong Kong is, I believe, illustrative of this important undertaking. At last count, we are home to about 1,000 FinTech companies and startups, representing an increase of 25% when compared to the figure last year. Many of their founders come from different parts of the world. But impressive numbers aside, there are different real cases showing how our fintechs are bringing changes and empowering individuals, business, and community at large. One example is what few may associate Hong Kong with, that is livestock financing. Traditionally, it would be very difficult for farmers, particularly those in the remote region, to obtain loans from financial institutions. But a local tech company in our cyberport has used blockchain technologies and IoT technologies, developed a real-time system for monitoring the location, health, and growth of livestock. This data has provided sufficiently credible information for lenders to accept livestock as collateral. And in a similar vein, another fintech company nurtured in the science park is using artificial intelligence and data technology to develop a credit risk model to help SMEs to obtain loans without collaterals. thereby enabling them to accelerate their growth and development. Besides, virtual banks in Hong Kong are providing convenient, innovative, and competitive services to individuals and SMEs. They have indeed driven traditional financial institutions to move faster in digitalization and product innovation. In fact, virtual banks in Hong Kong are getting increasingly popular. In a survey conducted by the Hong Kong Association of Banks, the majority of the respondents are now seeing virtual banks as convenient, innovative, and cheaper alternative. And more SMEs have begun integrating their virtual banking services into their business operations. You will be delighted to hear that our virtual banks are expanding into markets into Southeast Asia as well. And recently, 2 of them have made to the global top 10 in mobile banking applications. And don't forget, we also have 4 virtual insurance companies in Hong Kong. They are offering innovative products in areas that may be left out by traditional insurers, like coverage for pets, including dogs, cats, and turtles. During this FinTech Week, full speeches, conversations, presentations, dialogues, and business matching, I'm sure you will be hearing more fascinating stories of our FinTech firms and uncover the vast potential and collaborative opportunities that they offer. Ladies and gentlemen, Hong Kong's vibrant landscape of FinTech, I'm proud to say, is the result of concerted efforts of the government, the public sector, and the private sector. While our FinTech entrepreneurs are innovative, energetic, and resourceful, the government and the financial regulators see ourselves not just as a gatekeeper for investor protection or consumer protection, but also as a facilitator to help entrepreneurs succeed. That includes facilitative policies and measures, such as regulatory sandbox in collaboration with authorities in the Greater Bay Area to test cross-boundary solutions. That also includes providing seed funding, investor matching, incubation, and professional support services for our FinTech startups. And no less important, we are actively driving new initiatives to spur FinTech development. One example is the Commercial Data Exchange, the Commercial Data Interchange, CDI, launched by the Hong Kong Monetary Authority in October last year. It allows companies, particularly SMEs, to share their sales, logistics, transaction, and other data with banks on a consent basis, making it a lot easier for them to access loans and other financial services without collateral. In 1 year, CDI had enabled more than 8,900 loan applications and reviews, with an aggregate credit approval amount exceeding 8 billion Hong Kong dollar. We are encouraging the use of blockchain technology in financial products and lead by example. The tokenized green bonds issued in February this year by the Hong Kong SAR government were globally the first such bonds issued by any government. This issuance clearly demonstrates the benefits of using blockchain in capital market transactions. For example, it took only 1 business day to complete the settlement, as opposed to 5 days in the case of conventional bonds. In the policy address delivered last week by the Chief Executive, we have announced another piece of good news. That is, we are expanding the proof of concept subsidy scheme to support green fintech. That is bound to expand our green fintech ecosystem and will further reinforce our status as an international green finance center. While our green tech firms have been keen on opening up new markets elsewhere, we are also stepping up cross-boundary collaborations with our counterparts on the mainland and elsewhere. The Hong Kong MA, for example, is cooperating with the People's Bank of China to expand the use of digital EMB, digital renminbi, the ECNY, in Hong Kong's cross-boundary retail payments. Recently, an ECNY pilot project was initiated at the Hangzhou Asian Games for the use by Hong Kong delegates. Members were able to top up their ECNY wallets via FPS, the faster payment system. We are encouraging more ECNY applications. For example, facilitating the ECNY wallet to be used in Hong Kong by mainland visitors. And the Hong Kong MA and the Bank of Thailand will soon launch a bilateral linkage between FPS in Hong Kong and Thai's PromptPay within this year. It will allow Hong Kong residents to make retail payments with our FPS in Thailand and vice versa for Thai visitors visiting Hong Kong with their PromptPay. Ladies and gentlemen, I have touched on just a few of the recent developments and the far-reaching promise of Hong Kong's burgeoning fintech sector. Throughout this week of information, intelligence, insights, and experience sharing, you will understand why Hong Kong is Asia's fintech hub. I wish you all a memorable fintech week and the best of business and health in the coming years. Thank you.